like an infinite amount of
And
contractors.
so one of the things that really impressed me about you was I think it was day two. Day one was demo. Day two was demo. Day three, you had framing.
Yeah.
And your framer, you hadn't heard from him by 10 o'clock. So what did you do?
We went out and got a new framer.
What time did you have the framer there by?
1, 2 o'clock. So a few hours after the other dude ain't respond.
And so, guys, when you're doing these jobs, man, you know, you gotta come up with the solutions, man. If you go in with this mindset that certain things, you have expectations that certain things are gonna happen and they don't happen, you're gonna be upset. Your expectation needs to be that you're just going to get the job done. Your expectation needs to be if the guy didn't answer the night before, if he's not answering in the morning, that he's probably not going to show up. And so how do you put people how did you get them signed up to become a vendor? Because you got to be cautious doing that. Mm-hmm. What are the things that you had to do to get them set up on your vendor list?
Well, first you got to send them over the contract that'll get them on your vendor list. You got to make sure they got insurance, but that's going to be on the vendor list. They're not going to be able to do that if they don't got insurance. And then you have to get them to sign the W-9. That's just a tax form.
And what other two things? There's 4 things.
Independent contractor agreement, and then I forgot the other one.
The workers' comp.
Yeah, that's the insurance, the workers' comp.
No, workers' comp and insurance are different.
Oh, yeah, workers' comp isn't that like if they get hurt, it's like not on you.
Yeah. And so those are the 4 things that we need people to sign before they got set up on a vendor list. Did you get that from all of your people?
Yeah, most of them, Philip and Enrique, we already had on file, just had to get it from, and Will, pretty sure I have to go and reach out to Kathy.
Yeah, he's on file already.
And then the only dude who didn't have that on file is our plumber, so we had to get that from him.
Okay, so then how does a 17-year-old buy a house?
Credit cards, 0% interest credit cards.
Where did you get them from?
We got it from Fund and Grow, right?
You got them from me.
Yeah, I got them from you.
They're my credit cards,
get credit
man.
cards. I'm too young. I'm only 17 years old.
So they're my credit cards. But look, a lot of parents out here, you guys are like, now listen to this, man. You'll save up for 18 years for college. Caden, can you give them the statistics of college, man?
Man, you're gonna send your kids to college for 4 years. They're going to be like, you got like a 50% chance you're going to graduate. I think the exact numbers are 60%. And then when you get out, you're going to make a whole 50 grand a year. And then you're going to get taxed and make like 30 something grand a year.
I mean, that's breaking it down. But when you look at the reality of it, we've been bamboozled. Like there was a lady, and I don't know if she's on here, and she said, I'm a doctor and I can't even qualify for a $300,000 house because of all my student loan debt. Right. And one guy said, this is what he said. He said, well, Nate, it's not all about, he said it can be about the network. It ain't all about, I said, man, I went to prison, man. That network was free. And I still deal with some of those people today. Like, and I ain't telling you to go to prison, but I'm saying you don't have to go to college to build a network. That's like building a network with a bunch of more people that are going to make 50 grand a year. Like, come on, man. You need to step up your network. You need to go get around people that are going to make money. Where do you meet those people at? Real estate people. Go meet some real estate people. They crushing it. So, Caden, everybody who came out, we having a party for them here at our house next Thursday. They came out to your property Friday. You're going to have another every week. Been going live, right? But you ain't been down there since
Friday.
You ain't been down there since Friday.
I've been running from my phone on FaceTime and stuff.
Okay, so you've been running. So, but what are some of the mistakes that you made in the beginning?
Being all over the place. I worked out like he used to. Man, we used to be out 14 hours a day running to get materials for a whole bunch of jobs. It just is so stressful. And then you don't got time to focus on what's important. Because running and getting wood and windows and all this stuff really important? Or are you just doing it because that's what you have to do? Like what's really important is getting your budget together, seeing where you're over budget, where you're under budget, and focusing on getting new deals.
Yeah. That's the things that drive the company, right?
Yeah. Getting materials
and so now we're gonna bring on Amanda from Fund and Growth. She's the one. Now look, before I tell you guys to go use something, I'm gonna try it myself. Okay. So I did not call Fund and Grow, which is a company that we got an affiliate with now, that they'll give you $500 off, sign up through us, and they'll give you 2 accounts instead of 1. There's a lot of these companies out here, they charge you like 15% of whatever they get you. So just imagine they got me $93,500 worth of credit cards so far. Now, these are business credit cards. Now, I didn't need any tax returns or nothing. This is just basically going off of my credit score. Now, also, when I called them, they said, look, I'm going to let you know if we can't get you none. I'm not going to charge you. I'm going to work on getting your credit up. So that's like, you got at least a 700 credit? I was like, yeah, I think so. So they pulled my credit. I was good there. They got me, my first round, they got me like 40, I want to say 49,000. And then my second round, and these rounds take about like 4 months apart, 4 to 5 months apart. So I'm burning through them 0%. What they did was they transferred them over, and then they got me a bigger amount. And these do not report to my personal credit. If they report to your personal credit and you max them out, they're going to kill your credit score. So you don't want things that report to your personal credit. These are business cards. Now, if I'm defaulted and didn't pay, yes, I'm sure they would report to my personal credit, right? Yeah, like Lewis said, high utilization can kill you. And I've seen several people do this. You want to avoid that. For me, Fund and Grow is amazing. They got me 93,500 so far. And Caden, tell them how you were able to. Now, guys, a lot of you guys were like, well, how's he buy a house at 17? I mean, like, I don't know, man, how you buy a piece of gum? It's just a house. I mean, it ain't like he got a loan. He just used my credit cards. And we got Amanda. Is Amanda here yet? Donald, look out for Amanda because, there she goes right there. Okay. How you doing, Amanda? And so,
hey,
how you doing today, Amanda?
I'm great.
Hey, thank you for joining us. I know you have a call today, in 14 minutes with a bunch of our city groups. Hey, thank you for joining us. I know you have city groups all across the country, over 40 of them, and Amanda's going to be meeting with them to kind of break this down. This is what we do in our private community. But she jumped in here so we could tell you guys about how you. Now, look, I'm going to tell you straight up. You need to know what the heck you're doing. You don't want to take and leverage these cards and not know how you're going to get out of there. So, Caden,
yeah,
what are your exit strategies to get out of this property?
So our plan right now is we're going to flip it because it works if we do a cash out refinance, but it's just not as worth it as if we flip it. But if the economy goes completely just bad, and then we end up having to hold on to it, we still will make enough money from getting rent to hold on to it and then pay the mortgage off. So we can still do a cash out on it.
So if you guys hang around after Amanda, because she's got a limited time, he's going to break the deal down, and I'm going to show you how you can hang on to it. Now, Caden cannot get a loan until he's 18, but I already have him signed up with a lender who's going to be on here, I think, at 8 o'clock, right after her.
Yeah, he's in here right now, but he's ready to go.
Okay.
At 8.
So Adam's going to talk about how he can get you loans with no tax returns. You got to have credit. You got to have, I think, a 640, 660 credit. But what they're looking for is these are called DSCR loans. So you don't need any tax returns. They're not looking at your debt to income ratio. They're looking at this from a logical standpoint. So Caden was able to take that those credit cards and put them to an app. What's the name of the app you use?
Plastic with a Q at the end.
Show them. Didn't you pull that up so you can show them real quick?
Yeah, you're going to have to do this. I ain't good with tech.
Okay,
you gotta make sure
right here, you just go to share screen here. Okay. And then we're going to go, you got it on Google Chrome?
Yeah.
I don't know which one. You got all kinds of Google Chromes here. So let's just do this.
3 chance.
Let's just do entire screen here. Okay. And then, so we'll move this over here. And then, crap. Hold on. So where was this at? Right here? This is what you use right here?
There it is.
Yeah.
Yeah. So this is what he was able to use. And go ahead and tell him what you had to do.
Man, literally all I had to do was put the cards in here. And what that allowed me to do is because a title company, if you go and try to pay for a property with credit cards, you're gonna be like, oh no, man, you can't do that. You don't want that. We want you to pay with a bank. So be like, all right, we're gonna put the cards in here. And now when we transfer the money over to the title company, it's gonna look like the money's coming from a bank. And all they do is charge a I think it's 2.5% flat fee on every transaction.
That, but it was and for those of you saying, oh, that's high, keep in mind these are 0% credit cards. And the least one we have is 9 months left. And the maximum, the longest one we have is 17 months left. So we only have one with 9 months. The rest of them are between 12 and 18 months. But that 18-month one, you got 17 months left on. So I want to turn this over to Amanda. I know you got a few minutes. Thank you so much for coming, Amanda.
Oh, I'm happy to be here, guys. And I'm so excited to follow you guys' story because obviously this is what we made this for. So if you don't know who Fund and Grow is, we've been around since 2007. We specialize in one thing, and that is obtaining business credit, high limits through credit card stacking. If you're not familiar with that, it's just a way to have multiple cards to stack up. And like you guys just explained, Plastique is one of our preferred vendors. We have 3 total that just the same way, you just enter it in, you can pull liquid right off the cards. And yeah, Nate's got right around 100,000 right now, and he still has time left. And then I know as soon as your son turns 18, we're probably gonna see if we can get him in here and get some of his own as well. And yeah, 680 credit score is what we're looking for. We can work with people a little less. 660 is usually pretty easy to find those points, but we also specialize in analyzing your credit beforehand, like Nate said. We do everything on the front side. We do a pre-qual soft pull on your credit to see where you're at and if there's anything you need to get done beforehand, because I don't want to take your money. We do a 12-month program and then you've wasted 3 months because you had to work on some things that we can't legally do for you. We can't do credit repair. But what we do is analyze all that on the front side, and we can coach and counsel you on things that you need to do. Sometimes it's just that you have a very lean profile because cash is king, right? So you've just paid cash for everything and you just haven't taken the time to build it. So we help people like that as well. And for Nate's group, we do offer the $500 discount. We do offer a true BOGO. We will sign you up for 1 service fee for 2 people. You'll both get separate. It's not a co-signing. It is separate credit, separate businesses, and all of that. I have a special link set up for you to get access to that free pre-qual, free one-on-one consultation with my team before you ever pay us $1. And you can do the pre-qual, you can book the call, everything. And it's fundandgrow.com/Nate. I'm going to put it in the chat again for you. And I know Donald will help me with that as well. But fundandgrow.com/Nate will bring you to a special page that will give you all of that at once. And again, if you don't have the credit, we're going to tell you why. We're going to give you the counseling on that. We're going to tell you what to do and then to come back. Because we also have a 60-day money back guarantee for that purpose, because we're not going to do this if you can't. And all of the cards that we're going after are 0%. Average is 12 months. You do have some, I think Truist is like 9 months right now. Most of them are 12 months. You get some of them you get for 18 months.
Truist gave me 12 months. You
guys well, you're special, Nate. No, I'm just kidding.
No, you guys got me 20. You got me 25 grand on Truist for 12 months.
Okay, some Truist offers are only 9, so I like to be transparent. But you'll know that going in. We disclose all of that before we ever apply. We tell all of our clients what we're doing beforehand, and the entire process. And it's a done for you and done with you, because we will also be teaching you things throughout there, like how to go to these third parties, how to go in and pull this cash off the cards, how to extend 0%, kind of how to do all of the things long term, because you're only with us for 12 months. We want to make sure we're setting you up for success, because you do have to be responsible. These are like a loan, they're not a grant. So you have to have the plan built in. And in the Bur community, it's pretty much built into your plan already that you're going to refinance these properties. So just make sure you have that plan, because it will not show up on your personal unless you do Capital One or Discover, because they love to show up on both for some reason.
And that's the thing that I really loved about you guys, is that, to be honest with you guys, like, I tried to get this myself and I got turned down, and my credit score is over 800. So there's certain things that you have to know how to do, and you have to look like a legit profile. I guess I didn't do it. You guys did it for me. But one of the other things too is is that you guys call me, like literally will text me and say, hey, it's time for you to get another round of funding. I mean, just the communication is key. And I look you guys up and you're like out of 4.9 stars with almost 5,000 reviews. So you guys are the best people I found. And like I said, guys, girls, I didn't go to them and ask for an affiliate until after I used them and I saw how good they were. And then another thing too, even though Caden used this one to buy cash, what you can do is, let's say you're getting a loan. Let's say you're getting a private money guy and he's saying, hey man, I'll give you, 80% and you got to put 20% down and I'll give you, 80% of the, construction funds, or I'll give you 100% of construction funds, but you have to pay that first draw. One of the things you can do is just send over excess to closing to the title company and tell the title company, hey, I need that cash back at closing. So you can convert this money into cash so you can pay your vendors. There's all types of ways you can do it. We'll be going over that this week on my coaching call. Everybody that's on in a private group tomorrow at 12:30, we'll be going over that. And I know you got to jump in a minute. So let's see if they got some questions. Oh, how much do you think I'll get on my next round? And you guys will tell me exactly what I need to do to get that maximized for my next round, correct?
Yeah, they'll go in and analyze in between or right before each round. We do the same analyzation we would do in the beginning to make sure everything is showing up properly. Because, hey, listen, sometimes people forget to, renew their stuff with the Secretary of State, with the corporation, LLC side. So we go through and do the entire everything. We're going to analyze how your credit looks as of that day. We're also going to ask you questions about how you use the business credit and all those things to formulate a plan. How much you're going to get, typically you're going to at least see what you've already received as long as you've used it properly, which I know, Nate, you are. So typically on that'll be your third, I think, because we did some seasoning stuff in the beginning. You should hopefully see another close to 100,000 is what I'm hoping for on your
So I
next
have almost
round.
200 grand.
Yeah, our specialty is trying to get you to 250. Our target for every client is to get 250,000. That's our target point. So yes. And
there's a lot of these companies out here that charge you 10 to 15%. That's insane.
Yeah, we are flat service fee of 3,500 with the discount. We do have payment
and that's
plans,
for two people. That's for two people. If you go through our link, right?
Correct. And it's fundandgrow.com/Nate, all spelled out. That's going to get you to the special link. That's where my team will know to give you the discount, to give you the BOGO, all of that. But again, you don't got to pay until you know you qualify, until you know where you stand. I saw a couple questions. Yes, it's completely on the EIN. This will not show up on your personal credit. They do leverage your personal credit. That's how we get around having to provide tax return.
All right. Well, at least that's Amanda, not me. So, hey, all you guys thought that was you breaking up when she did that. You was like, oh, my internet. Right. So, I'll just go ahead and jump in here and see if there's any questions. But look, man, I just want you guys to know that my 17-year-old son is going to go through and he's going to show you his breakdown here in a minute. Alexa said, okay, so Donald, give me a couple questions here, or Val, you guys got a couple questions?
Yeah, we have one from Sarah. She said, do you work with line of credits as well, or just credit cards? I think that was
I got all that. I buy a lot of real estate, but for this purpose here, I'm letting my son, now listen, everybody, he gets to use my credit cards. That's all he gets one time. I mean, he can use them again until they're up. But he's going to turn that into $1 million before he graduates high school. Are you going to reach it, bro?
Yeah, it looks easy. It looks pretty easy on paper because I got to do what I'm already doing right now, and I'm just starting, and I'm getting 2 properties in a month. So
you'll have 2. So you already got your second property under contract.
Yeah, closing in about 10 days.
September the 15th.
12.
September the 15th, you close. Tell them about that property. How much did the people want for it?
Man, they was asking $250,000. We came in.
No. They was asking $220,000.
Oh, okay, 220. It was asking $220,000, and we came in at 40K, and it was like, all right, we'll take 50K, and it was like, nah, we'll do 48K.
So, but why did they come in that low?
Because they just didn't know how much. Because we went through the property, we broke down. Look, man, we come through here, fix all this up. It's going to cost us like close to $500,000 to come in and renovate this. So it doesn't make sense for us to come in here and buy this. It's not going to be $1 million or $750,000 property. We can't afford to pay that much for it.
So, what we did was we just came through and we said, hey, man, look, it needs this. It needs that. I mean, these are all real things, right?
Yeah.
And so, one of the things that we hit them with was it needs a roof. That's about 18 grand. And they're like, yeah, we just had an estimate. It was 17. Now, we can get that roof done for about 5 grand because we're vertically integrated. So all these costs, when you learn how to vertically integrate, we've helped people save so much money on roofing that is crazy. And so, that property there, though, it's 2,900 square feet. Probably not even going to renovate it, to be honest with you, man. It's too much work. The property is only going to be worth about $350 when you're done. So it's better to let somebody take that. Now, what do you got to do to that property? Where's the low hanging fruit at?
The low hanging fruit on this property, I think it's under one parcel, but it's got a whole bunch of land on it. So we're just going to subdivide it up into different parcels and sell them off. That's what we're going to do. And then to the house, we're just going to do some landscaping to make it look nice and then flip that too.
So you're going to have 2 lots out of it. And how much you going to get for the lots? You ran that.
Lots, we're going to get like 50K a piece. Then the house, we're going to get another 100K. But then it's also got a whole lot more land than we thought it did in the first place.
But that would be landlocked. So you can't landlock. So that land's going to have to go it's going to have to go with one of the parcels.
Yeah, because
it's got 3 parcels total, but they combine them at one time. So Caden's going to learn how to take that to the zoning department, get them rezoned, broken back down into 3 lots. One, a house that'll sell. The other 2 in that area, they're building brand new houses over there. And look, man, he could build a house, but it's not worth it, man. Get the easy deals, make the easy money, keep it moving. McCaden, how are you going to fund this stuff, man?
The second deal?
The second deal you got.
The second deal we're going to be able to fund through credit cards too.
Okay. So, but then after that, like when will you be 18?
I'll be 18 November 28th. So I'll be going to Adam Gunn to get all my money.
And so, Adam, are you in here? I don't know if Adam's in here yet, but Val, Donald, if you could look for Adam Gunn, he's a good, huh?
Yeah, he's in here. He's here.
What's up, Adam? How you doing today, brother?
I'm doing great, guys. How are you?
Man, doing awesome, man. Hey, Adam, man, thanks for joining us, man. So, hey, can you put the other guy on? He looked better. No, I'm just kidding, man. So Adam is a good friend of mine, and he was worked his way up pretty big in corporate. And you were doing about what, $11 billion a year in loans?
Yep.
How many states were you over when you decided to go out on your own?
I'm not good at math, but we had Colorado, Minnesota, North Dakota, South Dakota, Illinois, Indiana, Kentucky, Ohio, Michigan, Pennsylvania, West Virginia. I think that's
it's a lot. He had a lot of states. Yeah. And you were responsible for all of them, right?
Yes, sir.
And you lived right down the street from me, and you said, man, if they're going to fly me all over the country, I'm moving to Florida.
That's what I did. Yep.
Yeah, and you're in Florida. You're in Florida right now, right?
Yes, sir.
So, man, thank you for joining us. Now, Caden turns 18. Yep. Fund and grow, and his credit will be, above a 700 when he turns 18. What's his next step? What does he need to do if he wants to refinance, or if he wants to do let's say he wants to do a fix and flip loan? You know what a fix and flip loan is, don't you?
Yeah, that's basically where they'll give you money for a certain line item. Once you complete that, you go back to them. It's like a checklist. They'll give you more money and more money every single time you complete a checklist or item on the checklist.
So basically, go ahead and describe why you would use a fix and flip and what kind of terms you got on that, Adam.
Okay, two reasons to use a fix and flip. Kane nailed it, by the way. So you can use it to buy a property and rehab it, or you can use it because you own a property and you want to rehab that property. And what Kane said was spot on. It's a draw system, right? So, for example, somebody who's an experienced investor, like Nate, right, or Ryan Van. I saw Ray Van on this call. Like somebody who's got experience, you can basically buy a property, 10% down, they'll fund 100% of your rehab, right? And they'll do it based on your scope of work. Nate, you're better at this than I am, but it'd be like, okay, demolition is going to cost me X, right? And that was built into my scope of work. So when I'm done with demo, I take pictures of everything, do some videos, submit my receipts, boom. They reimburse you for your demo cost, and then you're on.
Yeah, but Adam, but it takes forever to get that done a lot of times, man, and that's holding my project up. How long does it take for you guys once I submit the pictures and the videos to get my funding?
Oh, 3 days. It depends. Now, let's be honest, man. It depends. If you're talking about something that we can't take pictures of, they got to send an inspector out, you're probably talking a week to get your money back. If it's something you can take pictures of and you're going to send in the receipts, 2 days, 3 days.
What would I not be able to take pictures of, though?
You tell me. Like, you had to remediate mold inside of a wall.
No. I tear the wall out. I take a picture with the mold and take an after picture. Document it. Easy.
Might work. How about plumbing? Like, you do some hardcore roughing. Like, I don't know, pictures are going to cut it, right? They got to send an inspector out for that.
But normally it's 3 days, right?
Yes, sir.
And so here, let's just say this property here, Caden bought it for 70 grand.
Yep.
He's got 70 grand in renovation cost and closing cost,
Okay.
soft cost. So he's in it for 140, 70,000. He has to put, let's say he's experienced investor. He has to put 10% down. If
Yeah,
he's not an experienced investor,
7K acquisition, right? So 7 grand down to buy it, but then he just has to fund his scope of work based on each step as he goes through it. But we cover 100% of it. So
let's say his first scope of roof is demo. Let's say 5 grand, tree removal cost him another 5 grand, and framing another 5 grand. So he funds that out of pocket. He takes the pictures, sends them to you. You guys send him an ACH for the 15,000, right?
Yeah, that's correct.
Awesome. Now, Caden doesn't have any income, though. He's just turning 18. Like, I mean, he doesn't have, let's say he doesn't have tax returns, or his tax returns are not good. Like, what do you got to get, a cosigner?
No, we don't even look at that. I mean, it's November 21st. Is that right?
No, November 28th.
28th.
But we
November
can change
28th.
the date on his ID if you want.
It's all good. 28th works. So at the end of the day, look, we don't care about what kind of income he makes. These types of products, Nate, they're designed for professional real estate investors, or for people who that's what they want to focus on. I don't want his tax returns. I don't want his W-2s. I don't need to pay stuff. We're underwriting the property, not Katie.
So are you saying that really he can go buy as many of these as he wants? There's no holdup on his debt to income ratio?
His debt to income ratio doesn't even come into play. The DSCR percentage of the property is the DTI for the loan. It's not him it's not like a conventional loan. Now, he wants to buy a primary residence. That's a whole different story, right? If you're talking investment property, it's not about his debt to income. His credit score and his reserves, those are relevant. His experience, relevant. But his DTI means nothing to a DSCR loan or a fix and flip loan.
So let's say he gets the fix and flip done and he says, you know what, I want to burr it. I want to get all the cash back out and pay off my investor and all my funds back.
Yep.
Is there a season requirement on that?
Yeah, 6 months. Now there are places out there that can do less than 6 months. I just personally don't get it because the rate's garbage. And if you're going to hold it, you should have a good rate. And if you're going to spend,
so you should just wait the 6 months out, right?
What's that?
You should just wait the 6 months out.
Yeah, I mean, you're going to spend 10 grand in closing costs. You might as well get a rate that you marry, you don't date, right?
Yep. And then so you told me last week you got somebody, I think, in the academy, a 5.5% rate. They did a buy down and they did like 65%.
Yes, sir. Based out of Ohio. Yep.
That is sick, man. 5.5%, 30-year fixed.
I thought he was a little bit crazy because I'm like, man, you're going to pay 3 points for that. But honestly, Nate, the loan amount was like 75, 80 grand. I mean, he didn't pay $3,000, got a 5.5% rate. So it makes sense.
Yeah. No, that makes sense, man. And that's what I'm looking at with Caden on his first project. Maybe he just rents it out and keeps it at 65% loan to value and gets a 5-point-something% rate, which would allow him to pull out all his cash plus about 30 grand.
Yep.
Plus 30 grand, tax free.
Yeah, put it in his pocket for the next project. Yeah.
Yeah. So, man, that's crazy, man. I didn't know you guys could do stuff with no. Now, what if it's not a seasoning? What if it's somebody that's doing like their second or third deal?
Okay.
What kind of down payment do they need then?
Are you talking about for like a fix and flip loan?
Fix and flip. What percentage down are they going to need?
They might need 15, 20% on acquisition, and they might only get 90% or 85% financing on the renovation. So they're going to have 15% in the deal.
Okay. And then
if it's somebody that's brand new, maybe 20%.
And then so on a DSCR, though, with interest rates being a little higher than people are used to. Now, me and you, Adam, we know these interest rates are great, right?
Yeah, all day.
There's a lot of people who think they're high because they just haven't been around long. I remember when we started getting stuff in the sixes, we was like, man, they're giving away money, right?
Yeah.
And when it went back up to sixes, people felt like, oh my God, the whole economy's collapsing. Like, nah, this is good.
Yeah.
The higher interest rate is, to be honest with you guys, the better it is for people who know what they're doing to be able to buy properties. If interest rates went to 10, huh?
You're going to write all your interest off anyway.
Going to write all my interest off, but man, I became really rich borrowing money at 11%. I really did, because I was buying stuff right. And I remember an investor you hooked me up with, man, back when you were living here in Cincinnati. He gave me this money to buy. It was a 48 unit. He gave me 380 grand to buy it. He didn't even want me to cash him out. I was going to cash him out. He was like, can you just keep that loan there? I was like, yeah, I don't care. I was paying him 11%. He made $168,000 off that property over 4 years.
I made two. When you paid off the loan.
He got mad when I paid the loan off, but look, I made $200,000 in cash flow. And when I sold that property, I sold it for $1.65 million. I made over $1 million off the sale of it. So I made more than the investor, and he was getting a lot more than the investor, and he made 11%. Yep. So you got the fix and flip covered. Now we're going to go to the DSCR. What are they looking at? They're looking at your credit score. What kind of credit score do we need?
I mean, I can do low credit scores, but you got to understand it's going to come in your rate, right? I can go down to, I don't know, 580, but it's going to be hard, right? They want to see 660 and above. 660 and above. And 20, you get better rate. If you've got a high credit score, it's better or equivalent to conventional loan rates right now. I did somebody with an 800 credit score earlier today. I mean, it was upper sixes with no buy downs.
Nah, that's awesome, man. So, but Adam, what do they need? So how many states do you do?
I can do all of them.
You can do all 50 states?
Yes, sir.
Awesome, man. Awesome. So, one of the other things is, what do people need to do to prepare when they come for you looking at the DSCR? Do they have to have a 1.2 debt service coverage ratio?
No, you don't have to, but a bunch of wrongs don't make a right, right? You got lower credit, you're sub 1 on your DSCR, you have no reserves. Like, it gets hard. It gets really sticky. It's going to be an awful process if we can get it done, right? So
what if I come to you and I say, hey, Adam, look, man, this one only has a 0.95 DSCR, but here's the play. Here's what's going on in the area. They're building a soccer stadium, a professional soccer stadium in right now. I'm one block. I'm going to be like, I need this property, and I'm just hanging on to it for the next 2 years.
I'm
If
gonna
it's
send you my
negative
link.
cash flow, can I get that deal done?
Yeah, I'm gonna send you my link to apply. Yes.
Man, so what do I need to have? What are they going to be looking for on the DSCR that I need to have and be prepared for?
We talking about cashing out a property, Nate?
We're talking about cashing out a property. They're not going to be looking, they're going to be looking at my credit score, right? They're going to be looking at, they're going to look at my deals, and the more deals I've done, probably the better rate I'm going to get, right?
As long as you either own a primary or you've done a couple deals, it's all the same. Whether you've done 100 or whether you've done 2, they don't care.
Okay, and then but what are they going to look for? They're going to look at my bank account.
Not on a cash out. I mean, technically on a cash out refi, your reserves are the same as the cash you're getting back. So they don't really care about that. They care about what's the setting of the property, right? Is it urban or suburban, or is it rural? They care if it's rural. We'll still do it, but it's going to be a lower LTV, probably going to hit your rate, right? They care about loan amount. Is it less than 100,000 or more than 100,000? They love loan amount. Like the bigger the loan, the lower the rate, right?
Now, why is that?
Why? Because whether they do 10 loans for $100,000 or 1 loan for $1 million, like for us, it doesn't really matter. For them, they put the same time and effort, resources, securitization. They do everything for a $100,000 loan than they do for $1 million loan. So they'd rather do $1 million loans, right? Loan amount's big. State setting is relevant as it relates to rate, right? Because there's some states, they won't let you charge a prepayment penalty. Prepayment penalty is relevant. If you got a 1 year, 3 year, 5 year prepayment penalty, it's going to be a better rate. No prepayment penalty, or a state like New Mexico, you can't do a prepayment penalty, your rate's going to be higher. Which is
now, Adam, what if I'm sorry, what if I don't want this stuff showing up on my credit though?
It doesn't have to. Now, I'm going to say that I have like 14 different DSCR investors. Some of them will report on your credit. Some of them won't report on your credit. Some of them, it's a little bit of a gamble, right? So Nate, if you, like when we do Caden's loan, it's not going to report on his credit unless you want it to. I'm going to send it to this investor if he doesn't want it on his credit. I'm going to send it to this investor if he does. But you just got to be careful who you're talking to, because a lot of people say, well, DSCR doesn't show up on your personal credit. That's not true. So it depends on who services the loan. If they service their own paper and they tell you it's not going to show up on your credit, not going to show up on your credit, right? If they don't and they sell it, it depends on who it goes to, whether it shows up or not. And some people, like the best rates out there, I've got one investor, Nate, he's always got the best rates, but it's going on your personal credit every single time.
So for me, I wouldn't mind paying, what is it, 25, 50 bips more to not show up on my personal credit?
Some days it's the same price. You just got to tell your lender, this can't show up on my credit. I don't want to call you back one day and be like, hey, why is this loan on my personal credit? It's a business loan. So you wrote it to my business. Yeah, I signed on it, but you got to make sure it's not going to show up on your personal credit.
And that's something that you guys can, on your end, you guys will do the research.
Yeah, I already did it. I know who reports, who doesn't, and I know who's a maybe.
And you know who's a maybe.
Yeah.
Got it. Man, sounds like you got everything covered, brother.
I've been working on it, Nate. You told me to get ready. I'm ready.
So everybody, like, come on with what kind of questions you guys got over there for Adam? And here goes the link right here. It's if you guys can click on this link here, Bur Academy, just sent it at 8:18. Let's see if we got any questions. Adam, you want to read the questions? Yeah, how can we connect? We just sent that to you.
On the chat. Let's see here. How many locations typically? Nope. I got to go down further. Credit card questions. What time do I start talking? About 8 o'clock?
Yeah, about 8. Yep.
I got to go down a ways. Man, a busy chat.
Adam, there's one from iPhone that says, what scenario would one use a DSCR loan only to buy a rental property, question mark?
A DSCR is rental property only. Fix and flip is rental property only. You can't use any of these loans to buy primary residence or a second home. It's only investment property because these are all business purpose loans. They have no interest in you living in the home.
Because they're looking for the thing to cash flow off the lease. They're not underwriting you personally. If I go buy $100 million building, everybody, the banks, they're going to underwrite me as an operator. They're going to underwrite me as my credit score. To get a $100 million loan, I only need a 660 credit score, right?
Yeah.
Then they're going to look at the deal and say, the deal can cover the debt, and we believe that Nate can manage and operate this property.
Yeah.
So what happened was these Wall Street guys, all these Wall Street guys, I think I'm saying this right. We always blame the Wall Street guys, but we don't know who the hell's putting the money up.
True.
They went and they put all these pools of money together and said, look, these are things that we can make margin off of.
Yeah.
And they can make higher margin off of this stuff than they can off of buying treasury bills. Treasury bills may be 3%, 4%. This stuff here, they're getting more. It's more risk. It's more risk. A treasury bill has zero risk, really. And so they charge a little bit more. And this is for people, you ever go to your financial consultant and they say, hey, are you looking for low risk, medium risk, or high risk? So that's this is probably a medium risk play for them.
This is probably medium risk. Fix and flip is probably high risk, which is why they charge 12% and multiple points up front, right?
Yep. And so, but I do know that you had fix and flip, like starting from 9.5 to like 11 or 12%, right?
Yep.
Depending on the borrower.
Depends on experience on fix and flip. Yes.
Yeah. And guys, that's not a lot because you're only keeping this loan for 6 months. So let's say you're borrowing $150,000 for 6 months and you're paying, instead of paying, 7%, you're paying 10. We're talking $4,500, but you're only paying half of that. So extra $2,250. And keep in mind, you're able to write that off because that's an interest expense.
Yep.
All right. So Adam, you want to jump into the questions, brother?
I got some questions. So Sheila wants to know, would my DSCR loan take into account my personal debt, my personal income outside of this property? No, we don't care. We're underwriting the property, not you. So your DTI means nothing. DSCR percentage is the DTI.
Yeah, but Adam, you guys are still going to look at their tax returns, right?
No.
Wait, you don't even look at their tax returns?
I have never done a DSCR loan and looked at a pay stub or tax returns or W-2. I don't care. They don't care.
Man, that's a game changer, man. This almost like when I got in the game in 2005 and they were doing the stated loans.
Yeah.
It's the same thing.
Yep. Yeah.
Man, you guys can grow quick. My first year, I did 13 properties when I first got on the real estate game because I didn't need tax returns. I just needed credit, and I don't even know what else I needed, but sounds like the same thing.
Pretty similar. So somebody says, let's see here. We talked about that one. What's the highest DSCR rate y'all have seen? It was the first referral I got from BIA Bur Invest, and dude didn't tell me that he wasn't a U.S. citizen, and that's fine. You don't have to be a U.S. citizen. You can be a foreign national. You can practically do DSCR as an I-10, but I didn't know highest DSCR rate I have ever quoted was 9.25%.
And that was for somebody who was in Canada or something?
No, he was here. He just wasn't here on a visa, and he was a non-permanent resident. It was like an I-10 loan. I mean,
can you get stuff done for Canadians and people that are, so you can get stuff done for people?
I'm doing a fix and flip from your group today. Took an application for a fix and flip for a Belgian. He lives in Belgium, which I don't know exactly where that is. Super neat guy. Bought something in cash.
That Belgium is either out east or west. It's in one of those.
I don't know. I think you're right. I think it's east or west. I don't know which. Yep. Let's see here. We're talking about Fund and Grow.
Adam, I have another one that was actually sent to me. It says, Adam, what do you suggest for an 18-year-old first-time buyer buying a quadplex and living in it for a year? He has no credit. I have the experience.
Does he need a place to live? Because that sounds like a great idea. I mean, we could do conventional financing for somebody like that, right? So if If Caden decided I want to buy a 4 unit, I'm going to live in one of them. I'm going to be there when all the renovations going on. I'm going to be the ultimate landlord because I'm there. I mean, that's fantastic. We can do an FHA loan. We can do a conventional loan. You're talking 3.5%, 5% down, conventional rates. I think that's a fantastic idea. Caden, you moving out of the house, or is that somebody else that asked that question?
I'm good here. I like it here.
Okay, I figured.
He likes it here. He gets a free credit card to go buy whatever he wants. He can even buy houses with it. He takes my Bentley every day. I come out, I got to drive my raggedy Tesla. No, I'm just kidding.
Let's see, I missed that. Are you doing DSCR on single family residence? I get DSCR, just need to know if I need to look at rents on a single family residence. Maybe that was to something in the chat, but yeah, DSCR 1 unit through 4 unit all day long, right? We do commercial. That's a whole different ball of wax. I'm not talking about that here because you got to have big money and big experience. Oh, there I just saw. You got more for me? Adam,
yeah, I have one from Terry. Adam, I might have missed it, but what minimum credit is required for DSCR versus purchase and rehab, fix and flip in brackets loans?
So great, that's an awesome. Who asked that question? That's an awesome question.
Carrie H.
Carrie, awesome question. Fix and flip 680. You're not getting a loan. Fix and flip below 680. DSCR. It depends on how miserable you want to be with me as we walk through this process. 660 is good. I can do 620, still okay. You get down to 575, it's going to be brutal, but we'll do it together. I'll hold your hand. I might bite it once or twice. 575, you're not getting below that. Minimum credit score for fix and flip, 680. DSCR, we can go lower. I think that answers the question. Did I do okay there?
Yeah, I think that was pretty solid, pretty clarifying. We have one from Drew. Drew Wellen, debating vacation home mortgage 10% down. Can I find a 10% DSCR loan?
I don't know of one. You could do fix and flip for a vacation loan if you were an experienced investor. That'd be 10% down. But DSCR acquisition, 15% is usually the minimum. 20% is the sweet spot, unless you're going to do rehab to it, and then go 15%. Who cares about your rate, right? But if you're buying a turnkey property using DSCR, 15% down, we can get away with that. Absolutely. Bear in mind, short-term rentals usually, like rural and short-term, they're not bad words. They're just not liked as much as long-term leases, right? What Nate's teaching everybody how to do here is to buy property and hold it, and typically that property has a long-term lease. If you go short-term rental, or if you're going rural, they're gonna make you bring more to the table, or if you've already bought it, rehabbed it, they're gonna give you a little bit less back. It's riskier. Short-term rentals are riskier than long-term rentals. Rural is more unique than urban or suburban, so it's gonna impact what you can borrow or the rate with which you borrow.
Awesome. We have one from Christina. She said, do they question where the down payment comes from if we use the business credit card method, or does the money need to be there for a length of time?
Nate, we're getting good questions, man. That's a great question. No, and I'm going to say this for me. Many of my investors don't care where your down payment comes from. If you think about buying a home for yourself and going through Fannie Mae, Freddie Mac, FHA, VA, whoever it is, a bank, they are going to source whatever money you bring to it. They're looking for long-term deposits. They care. These lenders don't really care, okay? They don't care where it came from. They care that it's there and that it's in cash. Great question.
Before we go to the next question, I see some people asking about the, Adam's company mortgage exchange as well as Fund and Grow for the credit card. So I'm going to drop both those links there so you guys have them. And that'll kind of give you more information. Contact Adam with the mortgage exchange, and then the one with the credit cards is Fund and Grow as well.
Thanks, Donald.
Yeah, yes, sir.
I see a good one. It said, would I be able to do this if I just create a brand new LLC? And this person's got good credit, right? These products allow for incredible flexibility. And if it's okay, I'm going to give an example. Wife owns a property, wanted to do cash out, but she wants to do it in an LLC. So move it from her personal name to an LLC. And in that LLC, she wants to use her husband's credit because they're 50-50. Yeah, we can do that. I've done a bunch of deals where somebody takes it out of their personal name, puts it into an LLC. I've done a bunch of deals where somebody wants to take it from one LLC into another LLC, brand new LLCs, doesn't matter. It's all good. It's all good.
We have another one from CK, and he said, can you do a DSCR if the rental is negative cash flow?
Yes, I can. It'll impact your rate. We can go way low on DSCR, but it's not going to be as good of a rate as 1 or 1.25%. But yeah, we absolutely can.
We have another question from, I hope I'm saying this correctly, I'm not butchering the name. Caliandro Lopez. He said, I have a property currently, been on the market for 4 months. What options would I have? It's been a hard money loan. Property has been raved. That's a word.
Take it off the market and cash it out and move on with your life. Cash it out, rent it out. Bridge loan would be another opportunity there. If you think you can sell it, but you're coming up on a hard money deadline, you can do a bridge loan. They're expensive, but that's why it's called a bridge, right? It's just trying to get you from where you are to where you need to be. So you could take it off the market and do a DSCR loan. You could leave it on the market and do a bridge loan.
Hey,
and
Adam.
A bridge loan is literally just temporary financing. Yes, sir.
I got a question for you, man. Do you have any interest only programs?
Like, can I do DSCR interest only?
Yeah.
Yes. And we can do it a couple ways. We can do an interest only loan, or we can do 30-year AM with an interest only period, maybe a year, 3 years, 5 years.
Yep. And so and I'm assuming that's going to be a little bit higher rate.
No, it's pretty similar. I would have assumed it'd be a lower rate. So when I saw the rates, I was a little surprised that they were pretty similar. But most of what we do, Nate, is 30-year fixed. All of my investors offer a 30-year fixed. All of them push the 30-year fixed because they want to keep that loan, Nate.
Like, yeah. They want that loan.
Yeah. They're not doing it short
So
term.
what they're looking to do, and correct me if I'm wrong. A lot of what happens is there may be a company that raises, $1 billion, right? And they promise their investors a 5%, 6%, 5, whatever return, right?
Yep.
And they take the spread. They make the money off of the spread, right?
Yep.
And so what about if it's a brand new LLC they just started?
I don't care. They don't care. Nobody cares. Most of them are newer LLCs. What you'll have trouble with is layering LLCs. So if we use an example of you two, we've got Nate Barger LLC, and then we got Caden LLC, right? So Nate Barger owns Caden, and Caden's going to own this property. Once you start intermixing LLCs, it gets really, the legalities are off the chain. Lenders don't really like that. But if Caden wanted to do a new LLC for every single property he owns, fine by us. We don't care.
Yeah, but Adam, okay, Caden sets out, or in my academy, I show people really a 5-year roadmap on how they can retire. But in order to do that, they're going to need 30 of these. Can you guys get them 30? What kind of limits do you have with your lenders?
Okay. Are you ready to do math for me, Nate?
Yeah.
Because I'm not good at it.
Hold on. So, let my son do it. He's going to get his calculator.
Perfect. All right, Caden, you ready?
Go ahead. Come on, Caden.
Get your calculator ready. Come on, Caden, you ready? So most of my lenders have an aggregate exposure cap of about $4 million. So let's start with question back to you, Nate. What's the average loan size?
We're gonna be probably 200 probably 200 grand, let's say.
Okay, so 200 grand, Caden.
Yep.
Average loan size $4 million. How many $200,000 loans are there in $4 million?
So 20.
Okay, and I got 14 investors. So what's 20 times 14?
280.
So I can do 280 loans for you in sequence before we got to figure something else out. But honestly, Nate, like I'm going to start with the lender I like, and I'm going
Yeah.
to use them. How long is it going to take you, Kane, to do 280 properties?
280 properties. I'll probably 5 years.
Okay, so 5 years down the road, I can go back to the first lender I started working with because you'll have paid down that 4 million to 2.5 million. Now I got 1.5 million I can lend you there. So let's say 400 properties before we got to get creative.
Wow. And by the time you get up to Caden, by the time you get up to 50 properties, brother, you're by the time you get to your 30, we're going to be moving away from this and we're going to be scaling the larger stuff.
Yep.
So, I mean, that's the reality is 30 properties, you can retire for the rest of your life. You have 15 to 18,000 a month in passive income. You'll have another 20,000 a month in appreciation if you bought in the right area. And you'll have another $3,000 to $4,000 a month in principal reduction. But here's the even better thing. If you buy these in the right area, every 5 years, you'll be able to pull out over $1 million tax-free. And you'll go back, and this is all we do, guys. And this is what I teach people to do is exactly what I learned. And it cost me, man, I would say in excess of $10 million to learn what I show you guys. I learned through failure. Failure is the most expensive thing that you can learn from. I mean, I got single things that I failed on that cost me, over $100,000. So when I teach people what I learned, it cost me decades of my life. But
Nate, you
I just
teaching anybody on here? Nate, you teaching anybody how to buy restaurants?
No, man, look, I had a junk. I was listening to poor people.
Yeah.
I had 2 industrial buildings that were pretty large. They went black in the last recession. The mortgage on them was like $20,000. I'm collecting nothing now. And I had to pick up the cam charges. I had a bar and grill. I had a junkyard. I was just all over the place. I didn't have any clear focus because I was listening to poor people, financial consultants saying, you need to diversify. No, you don't. When you know what the heck you're doing, you control the risk.
Yep. True story. We got a question from Courtney Clark, who's a realtor. And she said, so you can fix and flip, wait 6 months, and then cash out. The answer is yes. So 15% down for the fix and flip. What's closing costs, fees, down payment? When do you cash out, rebuy? Is it similar to conventional? No. Conventional is 12 months now because they changed it all up on us. Courtney, it depends on how much experience you have. Could be 15% down if you're newer, right? Do the fix and flip, and then you do a cash out into a DSCR, and that's your hold. That's your exit strategy, right? Cost, fees, down payment looks different for everybody, but I'm just going to say 10 grand because that's kind of what the number looks like. Your closing costs are going to be different on a $400,000 loan than they are going to be on a $70,000 loan. But there are fixed costs with every loan. You're always going to have an underwriting fee. You're always going to have an appraisal fee. You're always going to have a title fee. You might have a business LLC or business entity review fee. All that stuff's common. All that stuff's going to be 5 grand plus your escrows, plus your title, plus everything else. I would always say figure on 10 grand. Nate, you might say something different, but that's what I'd tell them.
What I teach people to do is this, Adam. Where people fail is when they get into these properties, they have unexpected expenses. You really shouldn't have unexpected expenses. You should have expected expenses.
Yep.
So what I teach people really granular, and my mentorship is like, how old is the hot water tank? We need to be budgeting for that. If it's 10 years old, we need to be budgeting to replace that over the next 5 years. If the HVAC unit's 30 years old, I might keep it. But there's a high probability that the inside unit or outside unit is going to fail. So I'm going to have reserve for that. So the property Caden's doing right now, it's got a 10 SEER R22 unit that is from 2002. The furnace is from 2002. Now, the furnace, I'm not worried about that. The only thing that really breaks in them will be the heat exchanger. And if that breaks, then we got to replace the furnace. But other than that, man, them don't typically break. That outside condensing unit, I'll probably have Caden order an extra one if he keeps it. Keep that in storage. We already have them in storage, actually, because the R22 unit, if it breaks and you have to replace it with a 410A and the line set is over 35 feet long, you have to replace the line set because the return, that quarter-inch line is not big enough. You need a 3/8 line. You also need to change the A coil. So you need to know all this stuff before you get in over your head and start buying properties. You also got to know that lifetime flooring that they're selling you, man, I don't know whose life they're talking about. They may be talking about Warren Buffett's life. He's 94 years old, right? So that stuff there, we're budgeting to replace in 5 to 7 years. Carpet, we're budgeting to replace in 3 to 4 years. Paint, we're budgeting about 3 years to replace the paint. Just because, man, I'm telling you, man, I've owned over 4,500 units, and I got this stuff down to a science. And I know that the real wealth is made by the appreciation and knowing exactly what area to buy in.
Hey, Nate, iPhone 20 is asking, how can I get in the academy? I think a couple people were dropping that in the chat.
We'll talk about that more later, guys. If you guys are interested in mentorship, hearing more about that, just say mentorship. We'll talk about that later. But, Adam, I just want him to get through all these questions. We got Jirius coming on in 5 minutes. Did we get that video clip of Jirius or no?
We found it.
Okay. Make sure you had that teed up because I want to show them on Thursday's call. The thing where you guys are all going to say, I can't find deals. If you can't find deals, I can 100% guarantee you why. It's because you do not know your construction numbers. And if you do not know your construction numbers, then how could you possibly know what a deal is? Because the biggest key to buying these value add is knowing how much your renovation is going to be. And if you call a guy out of the phone book, he's going to make the money. So you have to know what these costs are. You have to know how to manage these. And you guys may say, I don't have time for that. Caden, how long is it taking you to manage that project?
Man, it's not taking no time out of my day. Today it probably took about an hour, but that's nothing considering. Think I'm gonna make every day on this property. I'm probably making about $5,000 in equity. So I'm making $5,000 an hour on this property. Like, think of that. It doesn't take any time at all if you got the systems and stuff in place.
The systems are what's really important. And Caden has been around me his whole life, but he's been through the academy 2 times at least.
Yeah, two times.
And I bought him, instead of going to college, I called my buddy Osh and said, Osh, man, I need to put my son in your mastermind. And, that's like 20 grand, 20 something grand. But, Osh was like, man, we ain't taking nobody else right now. But he let Caden jump on the call. So Caden's learning real estate. By the time he gets out of high school, he's going to show you guys he's going to be a freaking millionaire. We're not talking about $1 million worth of property. We're talking about $1 million net worth. And that's in how many months?
9. I want to probably get it done in 8.
Oh, in 8 months. Okay.
Well, we graduate in 9.
You graduate in 9. Okay. So, but we'll break down that a little bit later, man. I just want you guys to know, look, man, parents out here, these are the things that you need to be teaching your kids. And Chris Long, he's in here, and he had his son come down, and they bought their first Bur. I mean, we did a video. I mean, he's 8 years old, and he understands how this stuff works. What's up, Jirius?
What's up, guys? How's everybody doing?
Give us a few more minutes with Adam, and then we'll jump you in, man, okay?
Okay.
You look clean, man. You go to Bo-Ricks today?
No, I got football practice, and I got to go back to soccer in a few.
Man, I don't
You got to
look
go
like
back
that
to
football
soccer?
practice, Jarius.
You're a maniac, man. Okay, Adam, are you still here?
Yes, sir.
All right.
We got more questions?
I'm sure we got a whole bunch of them, brother. Everybody want this money you got over there.
Well, it's other people's money. Everybody wants other people's money.
Yeah.
Yeah, we have more questions. We have one from Max Singh. He said, say I wanted to use a hard money lender and they want 25% down. Can I use the credit cards and transfer it into my bank account and use it as a down payment?
Yes.
Okay, solid. Let me see here.
So Nate would tell you got to be honest with your lender. A lender's like what did you say, Nate? Like an attorney? client privilege.
Yeah.
Yeah. I don't know if I'd be that honest with them, but you know, I would get that transfer done before you apply.
What he's saying is transfer it in there, have the money in the account, and they're not going to ask most of the time where it came from. Banks, traditional banks will, you know, but we can get through that a little bit later. We're going to be doing anybody that's in the academy, we're going to be covering this tomorrow. We're also going to be walking a deal with one of our other academy members. He found Caden a 2 unit. And Lewis, he's on here, man, and it could be a good deal. We just got to see. It's a great area, Class A area, 2 unit. It's just beat up. It's rough, man. The guy paid $35,000 for it back in the 90s. It's probably worth $250,000 to $300,000 now. But the guy hasn't done anything. I don't even think he's painted it.
Yeah, it looks bad.
But I own a 64 unit in that community, and when we bought it, the rents were $900, and we were able to push them to $1,800 through renovations.
Any other questions?
Yep. We have one from Matthew Kosher. He said, would I be able to do this if I just create a brand new LLC with a 730 personal credit score?
Yes, absolutely.
That's easy stuff, guys. Like, that's all easy stuff. Adam, do you got to go, or can you hang around after Jerry and what do you got to do, brother?
I mean, Nate, we can just have him come Thursday, and I can just
no. Listen, Jarius. All right, let me just jump in real quick. So, Adam, this is Jarius. I don't know if you know Jarius.
I know Jared. I got his shirt. I wasn't wearing his shirt tonight, but I wear his shirt all the time. It fits awesome. It's soft. Love it.
So the shirts
Thanks,
I got are
That's
cheap.
a really nice shirt.
The shirts I got are really cheap. They're not like, you know.
I wear your shirt too, but it's white, and I stained it already. I should have gotten a red one. But,
Our shirts are pretty good too, Nate. They're pretty good.
All right. So Jerry is my partner. You know, we own real estate together. He's also the first person that I ever mentored. Today he has over 30, 31, $32 million worth of real estate. And I mean, you guys know his story, man. He grew up, he had a 1.52 GPA.
I think 1.53.
Oh, yeah. Sorry, man. I didn't mean to offend you,
I'm not
man.
that dumb, Nate. What are you talking? Trying to give me no credit at all? Guys,
and so
listen,
what we're saying is, so Jarius, he does a live every, and it's this same link. You can use this same exact Zoom link Thursday at 12 o'clock noon Eastern time. And he's going to jump in real quick and just tell us a little bit about what he does. And Jarius, we got a clip of one of your last calls that you did. We're just going to play a couple minutes of that. But go ahead and tell them kind of what you're really good at, your background. How did you get into real estate?
I'll give you guys the quick story, and even this stuff, how many people in here, like, I didn't know Adam was going to be in here, and this is amazing. Like, the way that Adam lends and everything they've been talking about is like the new way to do real estate. Like, it's the infinite money glitch almost, and I didn't get
unlimited money glitch. Yeah,
I didn't get introduced to this whole concept of DSCR. I thought that I had to scale the traditional way for a little bit, and then when I found out people like Adam existed, it's a game changer. And you guys are asking a lot of really good questions about the credit card transfers and this and that. And the thing is like, we have answers for all of that, but we can't cover all that right now. But this is all stuff that we really break down in the academy. But one thing that I will say about working with somebody like Adam or any of these lenders is, for me, in my experience, like, I want to try to almost disqualify myself before I even start the loan. And when you have an amazing relationship with your broker, like Adam and these people, like Nate was saying earlier, like, they will take care of you. They will guide you. You just got to be honest with them, and they will find the best product and tool to get you what you need. But here's my story real fast. I grew up in a town called North Canton, Ohio, about just south of Akron. And I graduated high school, 311th out of 320 kids. And I was fed this dream that we've all probably heard is like, you know, work really hard, go to school so you can get a good job. And you get a good job and you can work for somebody that you can work for 40 years, 40 hours a week, and then retire with a $40 gold watch. Like, the 40-40-40 plan is what that is. And I was just like, I wasn't sure if that was the way, because some of the hardest working people I knew were the brokest. And I could see it firsthand. It was my dad, who worked 3 jobs. And he worked 3 jobs for us to just be like poor. Like I was still on free lunch. I was still on all this stuff. And I remember my guidance counselor at high school asking me, he's like, Jarius, what do you want to do after high school? And remember, I had this plan laid out. I was like, well, I want to go to college. And he's like, well, do you have any more realistic expectations? And I was like, crap. I was like, this man, it's like shaping my life. My guidance counselor is like, I can't go to college. So then I was like, well, I don't know what to do. So I ended up joining the military. And I served in the military from about 2001 to 2009, 10-ish as a helicopter mechanic. And what happened in the military was crazy. I went from the dumbest kid in my class, one of them, to being a distinguished honor graduate as a Chinook mechanic, fixing helicopters, one of the toughest jobs. And what that taught me, like when I really reflected that, look back at that, I'm like, man, I was like, it's not about knowing all the answers, because in school they're just like memorize, take test, memorize, take a test. But when you understand where to find the answers, it's an absolute game changer. And that's something that I stuck with me for a long time. And that kind of goes along with what we're saying earlier here with Adam, funding grow. Where do I buy? Why do I buy? Like all this stuff is about finding the answers, and you find them by coming to events and meetups and stuff like this. So that's it. So left the military, destroyed my credit, knew I needed to get into real estate, but didn't know how to. And I was introduced to this concept of real estate called wholesaling. And it's basically where I can find undervalued properties and I mark them up a little bit and sell them to people. Well, from 2010 to 2015, we went on to go do over 1,000 wholesale transactions, which is amazing. But the problem was I was still trading time for money. So I talked to Nate. I'm like, Nate, will you help me out, man? I see that you've got a ton of time. You've built this incredible life. Help me, because I'm from the outside looking in. I'm doing great. I'm making well over 100,000 a year, but I still didn't own my time back.
Now, when you said help you, Jarius, is that when you wanted me to help you with you wanted to work out with me and get on my weight loss plan?
No, I wanted to get you on your wallet weight gain plan. Like that's why I needed some Nate Barger creatine and protein drinks. That's what I need. I needed all of it. So that I got it all. And like Nate helped me do that. I mean, from 2016 to about 2020, I went on to go from 0 doors to over 60. And what's really special about that is they weren't just like any doors. They were properties in the right areas, like we teach in the academy. And what it did was,
tell them about your first 2 doors that you bought in the wrong area.
Yeah. So my first 2 were 2 ranches on a slab in Mount Healthy, and Nate was in Florida at the time. And I called Nate. I'm like, Nate, I'm going to be rich just like you. I bought these houses. And he's like, where were they? And I told him, he's like, you're going to sell those right now. And I was like, oh my God, I made a huge mistake. Luckily, I was able to sell them and get my money back. And then we found the right area. And it was like 2020-ish. I went to Nate's when COVID hit and things kind of slowed down. And I was like, Nate, what do I do? Like, here's my portfolio. Like, what's the best thing to do? And he looks at me. He's like, you're a millionaire. I'm like, what do you mean? And I was like, it doesn't feel like it. Like, I've got like $4 grand in the bank. What are you talking about? Because you're growing and you're putting more money in there. And he's like, you've got, $3-4 million in equity sitting here. So I was fortunate enough. I pulled some out, threw it on a couple of deals, put some aside, bought a lake house with cash, and then kind of chilled for a little bit. And then about 2022-ish, I went crazy again, about 5 houses in a row for content. Huge mistake. Shouldn't have done all those houses at the same time, especially when I love pouring into this academy as much as we do and into the group. But man, it's possible, guys. And your only limitation, it's not even you. It's that we've been preconditioned and sold this lie, because America's built on hard work. But that hard work, like Rockefeller wasn't out there moving on stuff. Carnegie wasn't bending steel. Like these people controlled the systems and they built this empire. And all of us are the exact same. But all that we're missing is the knowledge. Like there's a few missing pieces. And if you can make that commitment to connect the dots, it's game over, because real estate does not care if you're gay, you're straight, you're a boy, you're a girl, you're black, you're white. None of that matters. The only thing that matters is what you put into it is what you're going to get out of it. That's it. I can promise you. And there's not one person on this call that can say anything to me or to Nate, especially me. I've eaten crap at every level of this game. And I started with a 474 credit score, guys. I've never, ever taken no for a reason. I was too dumb and too hard-headed. And I had no other option. I had to make this work. And I did. And now the best part is seeing Chris Long make it work, seeing Justin make it work, seeing this, like our academy just crush these wins. Like this is exciting. And this is what gets me fired up. So That's it.
So we got a clip that we want to show from your last kind of what you guys can expect on this Thursday call. Donald or Val, do you guys got that? Or do you got that?
Yeah, I got it. I'm gonna pull it up.
Okay. Thank you for pulling that up too, Donald.
No problem.
Man, I can't believe you guys found it. That was amazing.
Yeah, because I asked him at like 4:00, like, hey, by the way, Donald.
Yeah,
I couldn't believe it.
All right, it's. I'm gonna try to turn it up all the way because it's a little bit quiet.
So here, guys, I'll put this in context a little bit. So,
Okay, go ahead.
so on Thursdays, you guys can join me Thursdays at noon. I'll cold call just different zip codes that people have, and just show you how I find off market deals. And this is an appointment I actually set that I looked at. We couldn't get the numbers to work all the way on this one, but there's many others that we could. But yeah, play the clip. And
why are you looking
join
up
me this Thursday.
obituaries?
Well, man, I was reverse prospecting. Guys, if you guys want to learn how to do this stuff, comment info or something. I love this. I'm the deal detective. That's what it is.
Yeah. Hey, my name is Jerry. I was calling about a couple properties that you owned on May Street. How are you?
What's this?
Jerry?
Okay, Jerry. What can I do for you?
Hey,
Can't
man,
hardly
I
hear
was
it,
just seeing
Jarius.
if you're interested in selling anything you had on May in Walnut Hills.
Yeah. Yeah, I'll sell a couple pieces.
Awesome. I'm actually going to be down that way tomorrow morning. Any chance we could meet at one of them?
Yeah. Be at 2351.
2351. Okay. Is there any way could you text me that right after this call? And does 9:30 work tomorrow?
Yeah, but Jerry, listen, if you don't have $250,000, don't even come. Okay?
Okay. No, yeah, I can live with that.
Yeah, I'm just telling you. Because that's what I want for that piece. And I got lots for sale at $25,000 a piece. Understand? And got another place for $150,000. So if you ain't got the money, I don't feel like being bothered, man.
No, I get it. I've got one over on 2328 St. James. I've got a few in Columbia, Tusculum. I've got 40 houses up in the incline. I've got a few, and I'm trying to look for a few more in Walnut Hills. Can I ask, is it occupied or is it?
No, it's not occupied.
Oh, it's even better.
I gutted it and brought it back.
So it's pretty turnkey. You'd say you guys did some updates recently?
Oh yeah.
Okay. No, man, I would love to do it. Can we meet tomorrow at 9:30?
Yeah, I'll see you at 2351 Main Street.
Oh, I appreciate it. I'll talk to you soon, man.
Yeah, bye.
See ya. Cool. We got an appointment. Guys, here's the thing. Everybody in Cincinnati that's watching the Zoom is, I'm going to go call Ty. I'm showing up.
There you go.
Is that the one you were looking for, Jarius? Jarius, is that the one you were looking for?
I unmuted you.
So that was a good one. That was one that you mentioned earlier. The one that I really liked is a little bit longer. It's the 9-minute one that I set an appointment for somebody in North Carolina that I just randomly met that she went and looked at. She actually ended up joining the academy. She's on all the calls, which is awesome. But
is she on here right now?
I don't know. But Nate, I've got to go pick Gabe up from soccer. Justin's doing a book club.
Just call an Uber for him.
Yeah, do that. Guys, you guys are amazing. You're in good hands. Don't suffocate, Kate.
So Jarius, what time on Thursday are you going to do this again? You're going to go through off-market deals, look at people's zip codes. What time on Thursday?
Noon Eastern, guys. We're going to be doing this. This is what we do. I can't wait to hang out with all you guys then.
And same Zoom link. So for some of you like Justin who goes to all the calls, shout out Justin. It's going to be this time Thursday. It's going to be the same Zoom link that we're using tonight. So you don't have to re-register if you want to get the email text notifications. We'll drop into the chat or literally just use that Zoom link that we're going to drop in the chat right now. Okay.
Thanks again, Jarius. Hey, I'll see you. I'll see you tomorrow, but I'll see you also there. We got a couple more properties for Caden to look at. He got, man. So
text me tomorrow. I also want to do a meetup at my house in Madisonville on Friday if we don't have anything going on.
Let's do one at your house in Madisonville and then the one Caden's working on. We can get, and then Thursday night, we got a bunch of Academy members over here at the house. So
I know we got football. I might just skip football. I don't know. All right, guys, these are my problems. They're good problems. Listen. I played like I didn't. I practiced high school and elementary sports. I never got to play. I wasn't good enough. And my parents never went to anything. That's why it's like it's important for me. Like I like to go coach them and like be at all this stuff because I couldn't do it. And Gabe's actually like good and it's fun to watch him. This is complete opposite of me, so that's exciting.
All right,
But
one last
everybody
thing.
have
One
an
last thing.
incredible night.
One last thing.
What?
What's the record with you coaching them?
I actually got asked to move up to go coach an assistant at Oklahoma. It was so good. I don't know. They're fine. They're good. All right, I'll see you guys soon. Bye, everybody.
All right, thanks, Darius.
Love you guys. Bye,
Yeah,
everybody.
love you too, brother. Thank you. All right, man. Hey, awesome job. So yeah, he's gonna be doing that. Everything that you guys think you need in real estate is just a solution away. Is Adam still here?
He is. Let me unmute him.
Okay.
I'm still here. Thanks, Donald.
What's up, Adam? How you doing? Hey, we got any more questions for?
While Jairus was talking, Adam was like in the chat just answering questions, man.
I was trying.
So anybody in here by show of hands need to get a hold of Adam? I can't see your hand, Ray Van, because you ain't got your stuff on. So is there any more questions for Adam? I know I told him he would just be on here 30 minutes. He knew I was gonna lie. He's been on here an hour. Yeah.
At least I got to look at Caden and not just you, so it worked out well.
All right.
I don't think we have any more questions for Adam. I think he answered them all actually. But I can go ahead and drop in the contact information for Adam again if you guys want to contact him.
Awesome. So then, guys, thank you so much for coming, Adam. Mortgage Exchange. Everybody give Adam a round of applause. Thank you so much for coming and spending your Tuesday night with us, Adam.
Thanks for having me, Nate. Good to see you guys.
Tell the wife and kids I said hi, man.
I certainly will.
And hey, Adam, got to get you guys on a weekly call with all our Academy students. We got like 5 calls lined up for them. I need a lender in there every week answering their questions. So I'm going to talk to you about that later. And same with Fund and Grow. We're going to get them in there every week and show you guys how to really just nail this process down. All right. Thanks, Adam. We'll see you later, brother.
Love you, Nate. Thanks, man.
Love you too, brother. Thank you. All right. Now I'm going to turn it back over to Caden. Caden, you got some stuff you want to show everybody?
Yeah, I got to figure out how to work Zoom.
Okay, here. Let me show you. It's real simple. You go to share right there, and then just
share desktop.
You could go to desktop.
Because we don't know which Chrome it is.
Yeah, you don't know which Chrome it is, so just do that here.
Hey, and this is easier than your video games, bro.
No, I haven't been playing my video games in a month.
Why not?
My video games are easy. I put them all on easy mode. I'm like, yeah. I just like making it as easy as possible.
All right, so go ahead and show them kind of what you wanted to walk them through.
All right, so the very first thing I'm gonna start off with was, ooh, what the heck is this? All this new stuff. So
because I logged in.
Oh,
So I logged in, So you probably had to go over here. So this is your deal that you got here, right? So this is the deal that you bought here for 70 grand. Show them how you found the comps and what you think it's going to be worth.
All right. So I found these comps. There's 1 right here, 2 right here, 3 right here. I just went on Zillow and found these. I just went, sold them past 90 days, stayed in the general area, made sure they're around the same square footage, around the same beds and baths. And then the calculator just went in here and it calculated how much the property would be worth. And this is pretty accurate because the realtor said we could probably get about $289,000 for the property. So if you go in and comp it on Zillow, you'll get a pretty accurate number just for that.
If you know what you're looking for.
If you know what you're looking for, but it's really simple. You just gotta put in a few criteria, make sure you're looking in the right area. That's really all you got to do when you're doing that. And over here on the Google Drive, I wanted to show you guys a picture of the contract. I might still be able to. Let me see, because it got all messed up. I don't know why it's like this.
I think remember, it made me log into mine.
Yeah, I don't know why it put all the, because they're there. So, all right, yeah, y'all can see it. This is the first page right here. I can't read it. That's why I need glasses. The undersigned buyers. We just put our LLC here. Offers to purchase from sellers.
When you first got this property under contract, you didn't.
I just put TBD LLC, so it means to be determined LLC. We don't have one yet. We just opened one up. We got in here a day after. And we just put that in there. And then offers to purchase from sellers. We just put the seller's name right there. For consideration upon the terms of property call, this is just where you put the address of the property right here. Payment or purchase. This is saying how much we're going to give them. And then this, most of the time you don't do this, but this is earnest money. This is money you give them before closing. The farther sum of, so this would only be applicable if you gave them earnest money. So for our example, we gave them $70,000 total, $65,000 at closing, $5,000 earnest, so $70,000 in total. Then contingencies, buyer's op. Should I read through this or just
Again, how did you close on that property though?
like where did I get the money? From the credit cards. We just put them in plastic and then we sent the money over to the title company. It looked like it was coming from a bank. They didn't have any questions about it, and that's where we got the money from it. So should I just go over
Now,
this?
you
Like,
don't have to go through. Just
Okay.
mean, you can just
All
go
right.
to the next thing.
so
that you
title
have here.
deed. This is just all you just read, and this is just exactly
So
what
go
it
back
looks
through
like.
Your property here though. I want to
You
go
want me?
back
You don't want
through
me to go to?
up here. If you go back through your property up here.
Okay.
So how are you going to pay the bank though? Because you did a 66%. Take that up to 75%.
It's not going to work at a
It
75%.
will, because Adam said he can get you a loan. Take it up to 75%. Is it not
Yeah.
working?
No, it's in view only mode
Oh,
because
it's
you
in-
changed the accounts.
Oh, okay,
You got to change
So if you
all
took this up to
accounts back.
75%, and you took the interest rate down to 6.
It'd probably be about a 1 point.
Right now, it's a
Oh, wait,
1.21
DSCR.
debt service coverage ratio. So tell them the breakdown of your renovation cost, your contingency, your contingency is 11.7. So break down all the costs for them and show them how you analyze how much you can pay for this property.
Okay, this is our can I do it?
Uh-huh.
So this is our after repair value. This is how much it's going to be worth after we repair it all. We just got this from the comps up here. And then max purchase plus renovation plus soft costs. This is what we need. I think this is what we need for the DSCR to work it here. This is what we need for the deal to work. This is the max all in for the deal to work. But
And
we're
what
all in
percentage are you-
100 and
What percentage are you borrowing on that?
66% on this. So it'll just auto calculate.
Yeah.
Depending on what you put in here is your percentage, but we're in it for like 140, 150, so we're way under that. Then this is just a breakdown of all the stuff right here to get our max offer of 108,000. We actually got it for 70,000, so we're way under that. You can see right here.
So where's that money come to when you do the refi? When you do the DSCR?
Where does what money come
Just
to?
38,000. Who gets to keep that?
Oh, you, because this is just extra money because this is the difference between your max offer and how much you actually purchased it for. So you just get to keep this.
And then, but how are you going to pay the bank?
The bank is just going to be paid by the person who's in there renting the property, because basically what the DSCR means is, here, where can I find it? The DSCR, a 1.21 DSCR, that means after all of our expenses are paid, that the rent will cover 1.2 times how much our mortgage is per month on the property.
And then, so if you go into, people are going to ask what your expenses are, right?
Mm-hmm.
So this is your expenses right here per month. Give them a breakdown of your expenses right here.
Okay. So advertising, this isn't really much. We didn't have to put much in here because all advertising is going to be is listed on something like Zillow or one of those
that's not a
websites.
monthly expense.
Yeah,
when it
that's not
comes
monthly.
vacant,
That's just
right?
when it comes vacant. That's why we only have $3 because it's not going to be vacant every single month. So
Not
we
even
just
every single year. So this property will be about a
year and a
3
half. Oh,
probably
three.
about 30
Three.
months to 3 years.
Okay.
And then your insurance.
The insurance, 150. We want to make sure we pay that. We want to get a good insurance. I don't even know. I don't think they can pay it for
You
rental.
can pay less, but I always like to get higher insurance.
Yeah, you want to get good
Yeah,
insurance. You don't want to cheap out on that.
Insurance with actual cash value. I'd rather spend. I mean, you probably could get insurance on this for $1,200 a year, but if you pay $1,800, you're gonna have much better insurance.
And then certified public accountant. This is just I don't know what the heck all this is. Certified public accountant. This is just how much we're setting aside. This is just to pay the accountant for doing all our accounting stuff. Then legal, $7. That's for any legal fees. I mean, you're not gonna really have much legal fees. The only thing you can really have is if you're evicting somebody. management fees, $110. That's going to be expensive because that's going to be like the HVAC breaks, their fridge breaks.
No, that's management fees, not maintenance.
Oh, management. Okay.
Yeah, like property management.
So yeah, that can be expensive if you have a management company like you. But if you're owning your own property, it's probably not going to be as expensive,
No,
right?
you just do all that yourself.
Yeah, but okay, my bad. This is maintenance right here. This is what is going to be a lot as well, because that's going to be you repairing all the stuff that might break on the property, fridge, if you supplied that, dryer, water heater, HVAC unit, all that stuff. This is taxes right here. I think yeah, 2,400 was the annual taxes per year. That might go up when we reappraise it though.
Yeah, but we're going to get a tax abatement on that. We're not going to go too deep on what a tax abatement is, but we'll have you come back after this deal's done and go into that.
Okay.
Now, I thought you didn't have to pay the gas, electric, and the water, and the sewage and the landscaping.
Well, we don't while there's somebody in there, but when it's vacant, which is going to be sometimes, we're going to have to pay that. We're not just going to be able to cut it all off. We're going to have to pay that.
Same with your landscaping?
Yeah, same with all of this stuff right here.
So if you're vacant, let's say in 30 months, let's say you're vacant for a month and a half, that's going to give you money, reserve account to pay for all your stuff?
Yeah.
Okay.
Because we want to have reserves in here for all this stuff so we don't got missing money and now we got to come out of our pocket. We just want to have it in reserve so we got the money there if we need it.
Okay. And then so the next thing is the modified adjusted cost recovery system, which we won't get too far into this, but do you understand how the different tax codes work and benefit you?
Yeah. So 27.5-year items right here. These are all things that we're going to be able to write off over 27.5 years. So basically, every single year, we're going to be able to write off a portion of these as a tax write-off.
Them go towards your basis.
Yeah, these go towards your basis depreciation, which is just year-over-year depreciation. It'll continue. I don't know if you guys can still see me on FaceTime, but it'll go down just at a continuous rate, the same rate every single year. And then 15-year improvements. I think 15 years we start to get into, you can do what is it? Accelerated depreciation, right?
Yep.
For 15-year items.
Yep.
So all these items right here, we can do accelerated depreciation. That means year one, we can come out and we can depreciate all of these. So we can have all of these.
Right now, it dropped down to 60% this year.
Oh, 60%.
But
Yeah, that's what I was thinking.
There's a bill in front of the House and Senate. One of them's already passed it. They're waiting for it to go back through and take it back up to 100%.
That just depends. I don't know if Congress is more Democrat or Republican right now. If it's more Republican, it probably will get passed, but I don't know who controls that. That's just a politics thing.
Yeah.
So that means that 60% of these things you will be able to write off year one as a tax write-off. Then 5-year personal property, we'll be able to do the same. And then the items that are below $500, I believe it is, you're going to be able to write off year one because they're considered maintenance items if they're below $500. So you'll be able to.
Below 2,500, you get
to 2,500?
Yeah, you get to
write
okay,
100% yeah.
them off year one.
So a lot of these things you could probably write off year one.
Mm-hmm.
Even though they're 5, 7, 15-year items, you'll be able to write them off year one. Heck, almost all this stuff right here, it looks like you'll be able to write off.
All right, so then back over to this here. If you go into your real monies be made, let's say this area is appreciation by 5% a year, the rent's increasing by 4%, and the expenses are increasing by 4%. Let's say year 6, you go to get a 75% cash out refi. You see your debt service coverage ratio is going to drop to a 1.04 at a 6.5. But let's say interest rates were at 6, it won't let us change that. But you may have to go to 70%. But if you're able to pull this off, you're going to do another cash out refi at $99,000 back. However, your cash flow is going to drop. So you want to make sure you keep these at a 1.2, son. You do want to have cash flow. But the more important thing is this appreciation here. So what else did you have? Your variance sheet. Let's go over here and see if anybody has any questions about this sheet they want to ask you.
Probably a lot of questions. We haven't even went into it.
You guys got any questions about this?
People were just asking where they can get the calculator, but I told them that they need to be in the academy to get access to
Yeah,
it.
this is something that we teach people. Like, this isn't something that you can learn over a week or 2 weeks. This is really extensive. To learn how to really use this thing, understanding the tax code, I mean, this is something that is like we do this on 20, 30, $50 million deals. So when I started teaching people this, I wanted to show people what we look at. And if you guys can start off doing this, you're going to be way ahead of other investors, down to what areas you're buying in and everything like that. So we'll jump back over here, Caden. Jump back in over here. Share your screen again.
All right, gotta go back and jump back into Chrome.
All right, hold on a second. Here, so hit share here, then just jump back in. What's the next thing that you had over here you wanted to share?
All right, the next thing is the variance sheet right here. So right here we have our budget. We have how much we spent so far, and then the variance between those. What that is, that's the difference between how much our budget is and how much we spent. So right here, we're $428 under budget. And right here, all the numbers that are in brackets, that means we're over budget by that much. So you can see this line item framing, we were over budget. We had a lot more to do there than we thought. And so same thing with the plumbing.
But you also had a contingency, right?
Yeah, we had a contingency in there.
So
this isn't accounted in here.
So your total was $51,151 plus about $10,000 contingency.
Yeah, probably more closer to 11.
Yep.
Yeah.
And so right now, you're looking like you're going to eat a little bit of that contingency, but your job's going to be $53,000. The two big items causing that is you decided to redo all the plumbing and a lot of the electric, right?
Yeah.
And so that's something that we didn't really know till we tore the walls out. Well, we knew the cast iron stacks, but I mean, we pulled permits on everything too. That slows the process up a little bit, but good job on this, man. Overall though, let's see where you're going to be at here. So you're going to be at this very first deal, you're going to make $139,000 going to get added to your net worth. Now, if you sell it, it's going to be a little less. This is Group Me. Why did you pull this up here?
This is what I was talking about at the beginning a lot. This is where we do all the city groups and we operate all the city groups in. Like Cincinnati, we got like 80 people in here. We just all communicate with each other. We need a contractor. You just go in there, communicate with the people in the city group. They'll hook you up, get you a contractor if you need them. If you need pricing, they'll just hook you up with anything you need. This is just everybody who's in your city will be in here.
And that's for the people that are in our mentorship?
Yeah, this is for the people who are in the academy.
What is this? Oh, what's that? Okay, so here. Go ahead and run them through what this is.
This is my, how would I say it? This is my layout to becoming a millionaire in 9 months. So right here, we got August 2024. This is when we first purchased the property. Purchased it for $70,000. Right? Yeah, we're already renovating this one. And then our renovations on it were $60,000 with the contingency, another $10,000 in soft costs, and this is our ARV right here. So it says $149,000 in equity right here. I don't think we're gonna have that much, but because we're gonna have yeah, why is it?
149.
I thought it was 139,000.
Yeah, but remember,
70,
since
60.
you use a 0% credit card, you didn't have to pay no interest on the loan.
Oh yeah, because that's taking into account a loan at
So your
6.5%. Yeah.
Lower. Actually, your renovations are probably going to come in under 60, and your soft costs are going to be under 10. So you're probably going to be about 150 something thousand in equity. But let's just say you're at 149.
All right. Then under contract, this is the one that we got. They were talking about rezoning and splitting up into a whole bunch of different lots. We're going to purchase it for $48,000, but then we got another $2,000 on a wholesale fee, $5,000 in renovations. That's just going to be to fix up the outside, make the house look a little nicer, make it easier to sell. $5K for soft costs. That's going to be mainly redistributing it and rezoning it. That's what it's going to be.
Yeah, and there's a little bit of risk in that. If they don't rezone it, then we're going to have to figure that out.
My bad.
But you know, that's just part of risk when you're doing real estate. So if you do that, if you're able to pull that off, you can make another $100,000, right?
Yeah.
Okay, and then tomorrow you got two other properties right now you're looking at. The 2-family tomorrow. Lewis, he's in here right now. He found this for us. If we can buy that right, you'll probably come out with $80,000 in equity. And then this other single family that you got right now that you got off market, maybe another $65,000 in equity. But you can see just on them 2 deals right there, he'll potentially grow his net worth by $250,000. So you can see with all this time here, it's not going to be hard to become a millionaire by the time he graduates high school. So, Caden, I'll let you just go back in here and answer any questions that anybody may have.
Oh yeah, y'all got any questions? Here, I'm gonna go into the. Oop. Yep.
Yeah, someone did ask if the sheet works for cost segregation. That's one that just came up as well.
Works for cost segregation? Yeah, it works.
So, I mean, it's really, you don't need to do a cost segregation if you know cost segregation is for if you buy a property and you want to bring an engineer in to tell you how many more useful life the roof has and the door. The way that this sheet works is you're actually tracking all the expenses and you know what they go to. So you hand this over to your CPA, your tax attorney, whoever you use, and then it's up to them to take this information that you got and do your taxes. We can't give you legal advice, right? Now, we have attorneys that come in and speak on this in the academy, but when you break it down like this, when you break it down like this, you know exactly where all the expenses are and where they were allocated to. You got all your receipts to back it up.
We have one from Christina. She said, was Plastique one transaction to the title company? At what point did you transfer the money?
So it wasn't one transaction because we didn't have a card that had $70,000 under it, but I think it would have been 3,000 or 3 transactions because we did $25,000 or not 25,000. I think the exact number is like $23,300 on 3 cards, and that added up to $70,000. And we just transferred that over to the title company. What was the second part of that question?
Hold on, give me 1 sec. I just lost it.
It was the day before when we transferred it.
Yeah, she just said, at what point did you transfer the money? That was the last
The day before the closing when we had the HUD. We knew it was clear to close. We knew the deal was going to close.
Yeah, it was just a wire transfer, so it was just quick, a day.
Well, it looked like a wire transfer to them.
Well, I think it technically is a wire transfer just from a card. Right?
Yeah, and they charge like an additional, $6.99 to do a wire
Yeah,
transfer.
$6.95.
Yeah, so it wasn't much, man. And maybe it costs 3% to use that money, but then he doesn't have to pay any interest. And if you're using a hard money lender, they're going to charge you 2 or 3 points anyways, and they're going to charge you interest.
We have another question from Matthew Kosher. He said, I need help with estimating rehab costs. I want to do a $203K loan, but hard to get contractors in to give bid before losing out on a deal, and they won't give me a ballpark over the phone. Any advice?
And you got to find out your own construction numbers. You can't, because if you try to get a contract out there, you're going to have to get 15 contractors out there to bid out every single item. You got to get to know your own construction numbers. Like, you got to know roof's going to cost about $3 a square, maybe $2.75 a square. I mean, knowing that, you're just going to save
$3 a square what?
$3 per square foot, and then $300 per square. A square is just 100 square feet. So that's what they do for roofing. They'll say like our roof that we had replaced on the property we're doing right now was 19 square. So 1,900 square feet. But you just got to know your construction numbers. That's really all you got to do, because I think it's not reasonable to have to get all those contractors out there.
Yeah, you're going to lose the deal. So, Caden, how did you learn to get so good at the construction?
I'm not. I've been learning it right now. That's why I wanted to jump into this. I was like, man, I know it's going to suck just jumping into it. It's going to be like the first time I worked out 45 minutes. I threw up 3 times, but I knew after this it's only going to get better. So I was just like, man, I'm going to just jump in, mess up a whole bunch, and then just keep on moving.
You feel like you've messed up a whole lot?
Not a whole lot, considering how bad you can mess up. I've heard stuff about how bad some people mess up, and I'm like, it's not that bad.
Yeah. Now you're doing great, man. You're crushing it, man. You're doing better than, man, 99% of the people, man. You're going to be done in 30 days. You're going to be up 150,000 in equity, bro. Come on, man.
Facts. We have another question from Quinn. He said, why do people do cost segregation instead of refinancing?
I don't know.
Cost segregation and refinance have nothing to do with each other. Cost segregation has to do with the tax code and how you're able to take the renovations that you borrowed the money to put in a property, and you're able to get a write-off on that. That has to do with IRS code. A refinance is basically Just what it says. You're going and you're getting a new loan to replace the existing loan, pay off the existing loan, and if you did a good job, you can get money back on top of that. Imagine playing Monopoly. And you save up your money to put a hotel on your property or 4 houses. And now you have to go make more money to go buy more property or buy more houses. The Bur method, what it allows you to do is say, oh, I just put these 4 properties on 4 houses on my property for, $2,000, but now they're worth $4,000. Now, instead of waiting to roll the dice, I'm just going to go borrow 75% out because I'm going to demonstrate to the bank that I can pay them back based off predictable, consistent income, which is what we show you how to lay out to the banks. Consistent, predictable income. And they say, well, you know what? We'll give you 75%. They'll give you 3,000 back. You're only in it for 2. It's worth 4. So now, what do? You just, every property you land on, you're buying. Most people, the only way they know how to make money, how do they know how to make money, Caden?
They sacrifice their time for money and they go get a job.
And if they want to make more money, what do they got to do?
They got to put in more hours or wait 20 years until they get a higher position.
But, the real trick out here is that every year they'll give you a 3 or 4 or 5% raise. Inflation's 3 or 4 or 5%. You're not getting a raise. So you can't get ahead working. You guys got to learn to hack the system, man. Once you learn how to hack the system, man, look, I'm not going to tell you that doing properties is going to be easy. I'm not. But it's a lot easier than working for 40 years and still being broke. Right? The learning curve that you have to go through, I can help lessen that. If any of you guys are interested in, any trainings that we got, any free trainings, we're going to send this back out to everybody that was on the call. This call tomorrow, we'll send it back out to you guys. But we also have a mentorship that can help guide you through a lot of that stuff and keep you from making the same mistakes that cost me millions and millions and millions of dollars. Right? And so if you guys are interested in any of that, man, just comment below mentor or free training and we'll reach out to you guys.
Hayden, I have another question for you. I think this one's really, really good. It's from Jake Tedesco. He said, if you had to choose the most valuable lesson you learned from your dad so far from one of your first 2 properties, what would it be?
Probably being organized, because think of it, all the companies that make a lot of money, and I mean, they're all organized. They all have to have systems in place. You can't get big being a messy company. It just doesn't work. You can't scale. So I'd say just being organized probably is the biggest thing I've learned.
And I've been letting them fail. And then I just ask them questions at the end of the day. Like last week, he had about 40 people come to his property and he was panicking because he didn't have a window. So he had to run and get a window. That's being unorganized. You knew you needed that window ahead of time. So organizing your materials to keep your job flowing is really, it's vital, man. It's vital. And in COVID, we did over 1,000 freaking units. We made off those units over $50 million. So when guys say, oh, it's hard to find a contractor, it's not hard. Like, what have you really been through in life? Like, I was in solitary confinement when I was a couple years older than Caden for 30 days. You tend to adjust and adapt to your environment. And a lot of people in America, man, they just haven't been through anything hard at all. When I'm like, they say it's hard to find a contractor, I'm like, what are you comparing it to? Are you comparing it to like sitting back on a beach? The things that you think about that are hard are the things that can make you money. Coming up with solutions to problems is how you make money. So when I get a problem, like I got one this weekend. I got a hotel. They usually don't call me, but my asset manager, he texts me, said, hey man, There was a gas leak. What do you call it? The people that stay at the hotel, the customer smelled a gas leak, called the fire department. Fire department came and evacuated the whole hotel. He was like, I'm just letting you know, we're trying to get our hands wrapped around it. We got 77 rooms sold tonight and 55 for the next day. It was slow. It was Memorial Day weekend, so it was slow. That's a 145 room hotel. So we're talking, you know, maybe we miss out on 15, 20,000 in revenue, right? But, you know, they were able to fix the problem. And then I got another message today because we got water springing out of the ground on one of our properties. And so, I mean, you always got problems. You know, it's a busted water line under the ground. Well, the city just came and poured concrete out for it. They broke it, but now I got to fight with the city. And, you know, that's a $3,000 fix. It's probably not worth fighting. Just go out there and fix it. These are the unexpected things that happen that we budget for. Now, I didn't budget for a water line to bust under the ground, but I did budget for things like that to happen because I've owned so many properties. I just know. Like, but that property I bought in 2016 for 15 grand. I put 45 in it. I had 60 in it. It reappraised at 172. I went and got a loan for 120. I rented it out for like 1,400. Then in 20 last year, so I already pulled out 50, 60,000 out of it. And it's been cash flowing like crazy. Now the rent's up to 2,100. It just reappraised at like 240. I went and did another cash out refi. I don't even know what I got. I bundled it with a bunch of other properties and was able to pull out 600,000 cash, tax free. And that was on a small portfolio of like, I don't even know, 8 properties or something. So once you learn how to do this, man, the properties just keep making you money, if you learn how to do it right and you learn how to buy in the right areas. That is the biggest key, is buying in the right areas. Because that roof is going to go bad. That floor is going to go bad. The HVAC unit, the appliances, everything's going to go bad eventually. The only way to pay for that is through appreciation. Because if you get a rent increase, let's say your rent's $1,500 a month, that's $18,000 a year. And you get a 4% increase on that. You know, that's, what is that? $600-700 a year? But if the property's worth $200,000 and it went up 5%, as 10 grand, right? That's almost $1,000 a month you're getting in appreciation. That's where you make the real money. That's where I built my wealth at. A couple weeks ago, we I don't know, in the past month, we did some cash out refis. I posted the HUDs in here. We pulled out over $10 million in cash out of some properties. Those properties we bought for $17 million in 2019. We've already refinanced them once. And we just they just reappraised at $45 million. Right? And we made about $5-6 million in cash flow off of them over the past 5 years. But the value went from 17 million to 45 million. You think I care about the 5 or 6 million in cash flow? I don't care about that. Give me the equity. Why? Because equity is something I can go borrow against and I don't have to pay taxes on it. And then the money that I borrow, that interest is an expense that stays with the property. You want to know how to get wealthy? That is how you get wealthy. Making money in your sleep.
Nate, I do have some earlier questions that we didn't hit on, so I thought I put them in to hit them. We have one from Dave H. He said, is Bur the best first investment, or should I do a flip first to build cash reserves?
Caden, what do you think, man?
No, I mean, there's no reason to flip if you can finance it and it works. Is a like for the deal we're doing right now, it's a flip just because it doesn't make sense to cash out refinance. But if you're gonna make more money in the long term, doing a cash out, then the property is gonna be able to recover or cover all the reserves you need. Because you're gonna budget that every single time that the rent comes in, you're gonna budget for a certain portion of it to be put towards reserves. So you don't need to save up to get reserves. The property is gonna make its own reserves.
Well, it depends. If you don't have any money, then by all means flip the property. Get you 50 or 100 grand in your pocket, right? Go make you 40, 50 grand, put it in your pocket. You don't want to be living out here like shoestring budget. Get you some money, man. Because if you found one deal, you can find another. Deals come a dime a dozen, a dime a dozen, a dime a dozen. If Caden can get his interest rate down to a 5.5%, even if he has to pay $5,000 to buy it down, and he could take out 75% on that property, then you'll be taking out about probably 50, 60,000 cash out. He'll keep 5 to 7,000 in reserves over there. The rest of that money he can go buy more property, or he could go sell it, make the 149 after realtor fees, and walk with it about 120. So would you rather have 50,000 in cash and not have to pay taxes, or 120 in cash, have to pay taxes on it, sell your asset off? If he keeps that property with 50,000 in equity, 50,000 in cash, and then he has another, appreciation on, let's say, a $300,000 property going up 5% a year, that's 4% a year. That's over $1,000 a month he's making in appreciation. So that's when it comes down to doing a time value money. And I haven't broken that down with Caden, but I'll break that down with him and everybody in the academy, and we'll show you guys what he's going to do with this property and why he's deciding on what he's going to do. It's all really internal rate of return.
We have another question from Riley Smith. He said, how do you apply for the business credit cards the correct way? What do you need, and how do you liquidate those cards?
So I tried to do it myself, and it didn't work. So I went out, and I always try to find things that can help the people that I mentor out. And so I went out and I signed up with that link that we have over there. And they did all the work for me. Yeah, I had to pay them money, but they did it. They did it right. I told them I don't want anything reporting to my personal. I want 0% cards. And then to liquidate the cards, when they say liquidate, that means how do you get the money off of them? We use Plastic, Plastiq. There's another app called Melio. And then there's another way that we're looking into. I haven't done it yet. I can't verify if it works, where you can pay you're supposed to be able to transfer the money over to your bank account. I don't know if that's true or not, but I'm looking into that to see if you can do that without doing a cash advance. Cash advances are going to cost you 20, 30%. You don't want to do that.
We have another question.
The whole reason that you're getting these 0% cards is so that you can utilize the 0% on them.
We have another question from Quinn. He asked, when you credit card stack, do you just apply to them all at the same time? I think he just wants clarity on what that means specifically.
The company does all that. They know exactly what they're looking at you. They know how many you want to go after, how many you don't want to go after. They know the things that are going to trigger a red flag. They know which companies to go after. They know which ones are going to give you the 0%. So for me, I'm not an expert in that. They are. Look, I like to pay people that are experts to do things for me, really, because my time is valuable and I don't want to waste my time trying to do something and then I fail and I end up messing my credit up.
We have a question from Carrie H. She asked, how do you vet these contractors that quickly?
Go ahead, Caden.
You just ask them for pictures of their work. That's all you really do, and ask them for, yeah, that's really all you do. And then you just got to make sure they got all of their paperwork. So if they get hurt on the job, they can't come after you. And make sure that you're under their insurance. Pay I think it's $150 or something. Make sure you're under their insurance so that you can go file your own claims if something happens.
Yeah, so what he's talking about is getting added as an additional insured. And a lot of it is network. So Caden was able, I told him, I said, hey, man, you can't use my guys, but you can use the network that you have in the academy. And so he went in, he started calling people that he knew in the academy. He went out. He also, we have a vendor list in every major city. And this vendor list will have people on there that are recommended through people in the academy. Number one, they've already used them. You can see who added them. You can call them and ask them about them. What kind of pricing do they got? How much are they charging you per square footage of paint? How much are they charging you to set cabinets? So it's utilizing the network that we've built out. And what we ask is, if you're going to take somebody out of there, then also add somebody in there. Now, it doesn't have to be your guy you're using every day, but if you got a guy that's like roofing, I gave everybody my roofing vendor. He charges $95 a square to tear off and put back on, and he has his own dump trailers. And he got that roof done in a day. He also had 35 square left over from a 3,000 square job he did. I don't know if you guys know how big 3,000 squares. That was a big job. That was 131 buildings he did. He had 35 square left, and he sold us the shingles and everything for 100 a square. So Caden ended up getting a deal on that. He ended up getting it done for a little over 200 a square because there were some additional items that he had to purchase, but it was 195 a square. And that was ice and water, synthetic felt. That was nails. Typically, what we tell people is you're going to be that, 240 if you're using seconds, closer to 300 if you're using retail shingles.
We have this is kind of a fun question from John Detzel. He wants to see, he asked, would you share some pictures of the house before the remodeling? So that he kind of wants to see photos on like Caden's property.
You got that?
You
Where's that report that you guys put together, you and Devontae, on the house before?
I don't think we put one together.
Yeah, huh? Yeah, you and Devontae. I was looking at it today. I got it on my phone. Let me send this over to Donald. Are you still in here?
No, I think Donald popped off.
Hold on a second. So let me send this. Go ahead and ask more questions. I'm going to find this and I'm going to send this report to you, Val.
Okay.
Can you? Because I'm not on it. You know what? Let me log into the Zoom and share it off my phone, maybe.
You can pop it over to me, Nate. I'll put it up if you want.
Okay. Yeah, thanks, man.
Hey, Christoph.
What's up, buddy?
Nothing.
You're doing great, man.
Thanks. Probably about to head in soon. I don't know why the smoke from those cigars always hurts my throat. Even with that fan on. It hurts my throat.
All right. Christos, I just sent that to you. If you want to pull up some of these pictures.
You got it.
Yeah. So we'll show you guys the finished product too. And it's going to be, man, it's going to look amazing, man. All right, go ahead. Questions? Did you get it yet, Christos? He's muted.
Where'd you send it to, brother? My email?
Text.
It just came
Yeah.
through. Let me send it to myself. You want to do any question while I do that?
Yep, we do have another question from Okami, and he asked, how do you pull all the cash from your 0% interest credit card?
One of the maps we talked about earlier.
Mm-hmm.
Plastic or Melio. Plastic's the one we use. It's pretty easy.
I have one from Dylan. He said, how many locations would you typically look at before you get a good deal like this? I'm assuming he's referencing Caden's deal specifically.
I mean, Caden, how many? I mean, you just started. Like, how many deals are you looking at?
Multiple. Probably like right now we're looking probably about five deals.
But out of them 5 deals, how many of them are good deals?
All of them. I'm not gonna look at some if it looks like if it's gonna be a bad deal.
I mean, the deals aren't hard to find, everybody. The problem is if you're looking at the wrong deals, if you can't find deals, you're looking at retail stuff. You're looking at competing on the MLS. You got to find the people who aren't trying to retail sell these deals. When you're out here competing against investors, number one, I'm not. If they say, yeah, we got 5 other people interested, I'll hang up on them. I'm not interested in that deal. I'm interested in the deal where we can work. I'm not interested in wasting time. So if they say we got 5 other people looking at the deal, well, call me back if it falls through. I'm not your guy. And like that property that I don't know if Lewis is still on here, but they wanted 220,000. We ran through the numbers. They dropped down to 150. We said, man, we're at 40 grand. They came back at 50. But we justified why we could pay them what we were going to pay them. We justified. We took time and put the whole construction budget together and showed them everything that it needed. Yeah, that was recorded, Chris. We did that on a live call with the Academy members. And we showed you guys right there on the spot. We drew up. Probably took us about 25 minutes to draw up and show them everything that needed to be done on that property and the price it was going to cost.
We have a question from Stephanie Stecker. She said, "Are real estate agents the best way to find deals to Bur? What ways do you recommend? Do you work with multiple agents or just one?"
Nah, I mean, agents are more for retail people. You know, unless it's an asset, somebody who is like a receiver for the courts, which means they're taking care of a distressed property. But the real easy way is just jump on. Jarius is going to show you guys all that on Thursday at noon. Use the same link to get in there. He's going to show you. We got a system that he's going to show you how to find everybody who's delinquent on taxes, everybody who's a tired landlord, everybody who's an absentee owner. Then you can zoom right in and look at their house and see if it's distressed. We're not wasting our time going after people that are taking really great care of their properties. There's no value to add there. We're looking for properties that we can add value, put a new kitchen in, costs us 12 grand, adds 25 grand in value. You know, paint the exterior of the building, cost us 6,000-7,000, adds 12, 15 grand in value. We're looking for properties we can do that over and over and over and be all in for these things at no more than 75% of the after repair value. Then we are going to make sure that they cash flow at a 1.2 debt service coverage ratio. Those are the very specific things that you need to do. But before you even do that, you need to make sure it's in an area that is going to appreciate. If it's not, I'm not even interested in buying and holding it. I'm not even interested in buying and flipping it, because if it gets stuck with it, I don't want to be stuck with a property that's not going to appreciate.
We have another question from Liam Welch. He asked, if you had a paid off primary home, would you have an issue with using the equity as a line of credit to start making deals happen?
Not if you know what you're doing. If you don't know what you're doing, yes, I'd be afraid like Dave Ramsey. But if you know what you're doing, you're controlling the risk. Christos, you get that pulled up?
I'm ready to go when you are.
All right, go ahead and pull that up, man. Run through the pictures with him, Caden. Tell them what you're doing, where you're doing it at.
All right, after this, I'm going in. All right.
Okay.
I gotta go.
Go ahead, buddy.
All right.
All right.
You see that?
Oh,
okay?
this file. Yeah, this was forever ago. Yeah. I was like, what is he even talking about? So right here outside, we've done a lot. Here, you want to go up there real quick, Christos? I'll just walk them through from the top. All right, so right here we've done the roof. That's what we got. We got that done day one. We got that done for, I think it's $3,900. Outside right now, we're painting. It's all white right now. It looks really good. Those windows, we're replacing all of those windows. Doing the landscaping, we landscaped all of that. Those windows, replacing those. We replacing all those. All of this pale skin color stuff, we pressure washed that, and then we're gonna paint all of this all of that black.
Yep.
It's gonna be contrast. It's gonna look like black and white. It's gonna look good. And then we was at right there at that bottom right there.
When's your glass?
Tomorrow.
Okay.
Should be. I don't know. He ain't respond back yet.
You want me to keep going?
So I don't even know where this is, because it looks so much different. So yeah, that's the kitchen. That's the
up to the kitchen.
Up a little farther.
Other way. Oh yeah, there you go. Yep.
So this isn't even there now anymore. We stripped all of this out. We're gonna the kitchen's actually gonna be in the room that's to the right of this. All because the kitchen just didn't function well, because all the way to the left of here, if you guys see this little tiny white door right here on the second or on the first picture, that's a bathroom. So basically, like, it's just nasty. Like, I don't know why they decided to put a bathroom right where the kitchen was, but
So where you put the kitchen to?
the kitchen, I just told them.
Okay, but show.
But I don't know
show
where
the
that's at.
picture.
I don't know where it's
Yeah,
at.
we'll see if we can
I
show
probably
them.
won't even be able to tell. Well, that room I'll be able to tell.
Yeah.
Out on the back, we're just gonna paint all of this stuff, pressure washed it
All
and
the
painted.
bricks painted too, right?
Yeah, I got all this stuff up, all of this landscape and stuff. Wait a minute. Go back up real quick.
Is that better?
Yeah. So this just outside, just pressure wash, cleaned up the landscaping again. Um, you can scroll down. Same thing here. And then on the back, just painted it again. Um, then this garage right here, the one to the left, we had to fix that. The garage door was all messed up, but we were able to get that in. We were able to fix the garage door for $300 something compared to, I think the other option was wait 2 months to get it a new one in for like $3,000.
Well, it wasn't that much, but it was a custom size, 7'5", and so it would have taken a couple months to get that in. So we had to fix and work with what we had.
And here, the steps came like that. The steps was nice. We're not doing anything to that. We probably just gonna paint them. Yeah. I can't even, wait a minute. Go back up. I'm trying. So that, I can't even tell what that room is right there. I don't know. Oh, that's the master bedroom. Okay. Yeah, had a whole bunch of smoke in there. So we just went in there. We sprayed that so we can clean it up. Yeah, that's all we're doing there. We're replacing those windows. We're gonna obviously paint the whole inside. Then this the master bathroom. We completely gutted this. We're gonna redo it. We're gonna put a bathtub here, but we're gonna extend it out to make it a little longer.
No, it's the same size.
It is. I thought it was a 60. I
Nope.
thought that one was 56.
Nope, that's a 60.
And here we're just gonna fix this. I think that's Wilbur's gonna fix that because this is just drywall, so he can crack this out and fix it. It's not plaster.
So that's down in the basement where the basement had to be jacked up because of some of the beams. Caden, would you give me another water, man? You can go in now. That's good, Christos.
All right,
Wait,
brother.
yeah, grab me another water and then come back out and say good night to everybody.
Hey, Nate, with that big crack, most people get kind of intimidated by that. Would you say you guys did or no?
No. I mean, you got to find out why. So we went right down into the basement, and the joist had deteriorated about 1/4 of an inch. So we just had to jack, which we haven't done yet, but we'll be doing that probably tomorrow or the next day. Jack all that back up. Caden, come here, man. Say good night to everybody.
All right, I'll see y'all. I gotta
go. Hold on. Come here, Caden.
I'll see y'all. I gotta go in. This smoke's messing up my throat. It hurts. I don't know why it always does this.
All right, man.
All right, I'll
Thanks
see
for
y'all.
coming out, man.
Yeah, I'll see
Y'all
y'all.
tell hey, next week, man, you're gonna give us an update, have some pictures in there? Huh?
Jerry started, he had to come over there and take some.
So next week, Caden, he's got like 250 pictures. So he'll put some pictures together so you guys can see what it looks like outside. Amazing transformation. But again, guys, look, this is the American dream they didn't tell you about. They told you the American dream was working for 40 years. They told you the American dream was paying off debt. That's wrong, man. Wealthy people love debt because they realize that if they can keep you out of debt, good debt, they can keep you working for 40 years. How else are they going to keep you working for 40 years, man, if you don't need money? They taught you to save money. You know what happens when you save money? The bank loans it out to somebody. It's called fractional reserve banking, though. They don't just loan. If you put 10 grand in there, they don't loan 10 grand out. They can loan up to 100 grand out, right? And so when you start to understand the way that our financial system was designed, it was really designed to create massive wealth by entrepreneurs. And it was really designed to keep the working people working just like robots the rest of their life. When most people retire, they have 13, I think I read it was 13% of their life left. And those aren't the good years. So you guys got to get out here, man. Whatever challenges you're having, the benefits of going out here and taking a chance on yourself far outweigh the benefits of not. I got one of my friends that I met through the academy, Sean Derringer. I don't know if he's in here tonight. We have something we call the Quitters Club. And I don't know how many people are in it, but there's over 60. These are people who went out and pursued real estate full time, and they've quit their job. They've quit their W-2 jobs and pursue real estate full time now. That's in our private group. That's what they do. I think Chris, he's one of them. Chris Long, he's in here. You know, he had a company and he just wanted to do real estate. And, you know, the amount of Chris, can you come up real quick, man? Just kind of tell them like how your life's changed, man. Can you unmute Chris Long?
Yep, I just asked him to unmute. He should be, I don't know if he's gonna actually unmute, but
You put Chris on the spot. Chris left. He don't want to talk. Chris, you there? You got to unmute yourself, Chris. So, but, you know, you guys got to take, there he goes. What's up, Chris? How you doing, brother? You got to send the unmute to him, Val.
Mhm.
There he goes.
I got a separate video and I had to open my laptop up and it won't like run my mic, so it's wonky. But yeah,
What's up, Chris? How you doing today, brother?
Doing well. But yeah, I mean, I got in the academy in July of 2021, and real estate became my passion. I had some properties we owned before that, and I've just deep dove what Nate offered, and it's become my passion. So I mean, since then I've learned, you know, that I want to do real estate more and more, and I've transitioned what I did into more real estate every day as life goes on, and less of what I was doing, which I still own a printing company, but only got a few clients left, select clients that I work with, and then the rest of the time I'm devoting to learning and growing my real estate.
No, that's awesome, Chris. So, but now what I saw was you're teaching your kid that, man. That's the most
Yep.
powerful thing, man.
Yeah, so then, you know, just like Nate, my son's 8, well, he just turned 9, so I'm slowly implementing that, and he's great with numbers. I love running numbers with Nate, and I'm kind of like a sponge to it, so my boys picks up on that stuff, and that's what I'm embedding in him. We're going to do a walkthrough on one of the units in one of our 9 units. I told him it's a gross one, so I'm going to have him break down, and I want him to break down that construction sheet with me, and then, you know, if he gets worried about a room, it being too big, then we'll just break it down by room. And if that's too big, we'll break it down by wall. And we'll add it all back together. And then I'll have him help me pick out the flooring. And then we'll know what the labor is, you know, and we'll just break it down. And then he's going to see that, you know, it's really just a math problem. And it's just the knowledge.
Yeah, man. Well, thank you for everything you do, brother. You inspire so many other people, and you're always helping, man. I appreciate you, brother.
Welcome. Thank you, too.
Thank you, brother.
All right.
Yep. So you guys got any other questions?
I have a couple more, Nate, if you want to run through them. We have a recent one from BW. He said, making the jump from single family to multifamily can be tough. What is your best advice to make this jump?
Get a mentor. I've been telling people, man, like I told Chris earlier, I was like, I don't want to do a mastermind for that stuff because it really is time consuming. But I feel like I'm doing a disservice to the people that have already become millionaires and are ready in our academy if I don't. So I asked Chris, would he help me? And I got some other people, Christos, and some other academy members, and they was like, they'd help. And I told him, I said, man, I'll show you guys how to go out and make as much money as you want. The multifamily is a different beast, though, man. And if you can't get through getting 15, 20, 30 single family homes, I don't even want anybody in my mentorship program that can't do that because it's hard. It's not hard if you had a knowledge, but I want to know, it's like going to war. I want to know I got guys that are going to war with me that are really ready and really about this. Because think about, you make a little mistake on a single family and you buy 100 unit, it's multiplied by 100, right? So problems are always going to come. Problems are always going to exist. But I want to know the people that are standing by my side are ready, determined, and we're going to go conquer these problems. That's all that really matters. I mean, opportunity doesn't present itself as a pretty property. That's just not how it works. You want opportunity, go find the ones nobody else wants. And the more hair they have on them, the more opportunity. Sometimes, though, the hair is too much for the opportunity. So you got to know how to run them numbers. And really, when you jump in and you really understand multifamily, it's a whole different animal. I've literally bought properties, and the day I bought them made $1 million or more, because a lot of times you're buying financial statements, and people that don't have their financial statements together, I can look at them and I can be like, I know what that property is going to run at. And, you know, for instance, we bought one off a guy, bought it, I think, in 2021 it was a small property. It was 31 units. We bought it for 1.15 million. It's 29 or 31 units. I even showed you guys in the academy. I don't know if you remember that, Chris, but I broke this property down. I showed you his financial statement, and he had brand new HVAC units above the line. Them should have been below the line. He had his federal taxes that he paid as a write-off on this property, which was $30-something thousand. And so here, let me just show you guys what that means right there. So I'll show you the quick breakdown of let me see here if I can jump in and pull up a calculator real quick. I'll show you how easy that was to add money to. Let me see here. So we bought it at $1,001,500. This was a guy that had owned it. It had been in his family since 1980. He sold it to us first at an 11% return, an 11% cap rate. So that was the NOI. The rents were low. We were able to push the rents, I think, $200 per unit. So plus 200 times, it was 31 units, I believe, times 12 months. So we were able to get the NOI up to 200.9. Plus he had another 34,000 and stuff on there that shouldn't have been on there. So that was our new NOI. And we sold this at like a 6.5 cap. And we got 2.8, because when I say a 6.5, that's going to be, you know, we sold over 2.8. There was a discount we had to give because the new taxes going up from the million to the 2.8 million, discounted it down to a $2.8 million price. So you can make a lot of money. We had 1.6 million in that property. We had to do renovations, but we ended up making $1.2 million or $1.3 million off of it. So you can certainly make money easier off of them, but you have to really know what you're doing.
We have this question that I think is actually really cool. It's technically about mindset. Hold on, let me just pull it back up again. This is from Noah, and he asked, how do you get comfortable leveraging debt to make money?
How do you get comfortable going to work every day for somebody else and not and living paycheck to paycheck? And doing it 5 days a week for 40 years. You know, I mean, look at your options. How could you not get comfortable having somebody else pay your debt down while the value of real estate goes up? It's knowledge. So I can give you the knowledge. I'm giving you some knowledge tonight, but you really need to be around the right people. You need to have the right systems. You need to be around the right people. And so really, man, if you're asking them questions and you really want to learn this, man, get in my mentorship, man. You're not going to regret it. One of the main regrets that we hear from people is, man, I wish I would have done this sooner. But when you get a mentor, we're taught that somebody's scamming you. Or you're going to I'm going to show you how to become a multimillionaire. Cost me millions of dollars to learn what I learned. We got accountability coaches. We pour back in. We don't do this thing like most mentorships. They'll have these up charges after 3 months or 6 months. They want to charge you more money. Every year there's a renewal fee. We have a technology fee. It's $199 a year. We got 5, 6, 7 coaching calls a week. We got everything for you guys, man. Oh, we can't do the work for you, but everything else we got. So if you guys are really serious and looking for mentorship, man, just say mentor below. We'll get you on a call to see if it's a good fit for you guys. And if not, just get on these calls with me. They're free. Get in a Bur Invest group. It's free. Like, we give out plenty of knowledge, but if you need somebody to hold your hand a little bit and walk you through the process, we ain't nowhere near as much as a college degree. Not even a semester. We're going to show you how to be multimillionaires. College is going to show you how to make $53,000, $54,000 a year, and they're going to take 4 years of your life and charge you $100-something grand. So how do people get comfortable with that? That would be my question. How do you get comfortable going to college even if you're a doctor? They don't make a lot of money, most of them. I mean, I run into doctors all the time, man. They're living paycheck to paycheck. They make $300,000 a year. Their insurance is $70,000. After they pay taxes, they're walking away with $150,000, $160 grand. You can't raise a family off that anymore. You know, I mean, you're just living paycheck to paycheck in a little bit nicer house. Yeah, Chris Long said, we have doctors and attorneys in our academy, like literally quitting their jobs to do real estate.
Nate, we have one more question if you want to get through it, and I think that covers all the ones that I can see on my end. This one is from, hold on, let me re-pull this back up. This is from Tommy. He said, I got a middle score of 803 on my personal credit. My COVID got charged off, but I did pay in full once I realized. I'm starting a new LLC though with new EIN, I guess. How bad is that charge off gonna hurt?
What was the charge off for?
He said the charge off, I don't even think he clarified that. He just said he's starting a new LLC though with a new EIN, and he wants to know how bad that charge off is gonna hurt. He has a credit score of 803 on his personal credit.
How long ago was the charge off, and what was it for?
Hopefully, we see what he says. We have another one from Gilberto. He said, does DSCR loan also work with fix and flips multi-units?
You know, that's a good question. And that's an Adam question. Because I really don't know. Now, I know this, that I had one of them lenders give me, like about 5, 6 years ago, they gave me a $5 million line of credit to go buy multifamilies, distressed. But I don't know. Adam probably has a solution for that, but you would have to ask him.
Awesome. I don't see any more questions in the chat. I think we pretty much ran through most of the questions that I can see.
Well, man, I want to thank you guys all, man, for coming in here, supporting my son. You know, I hope that what he's sharing with you guys can inspire you to uninstall the indoctrination that we've all been taught through school, because that's where it all starts. It starts in public schools. It goes on through college, and they're really just teaching us to work for 40 years for somebody else. And I don't care. And look, you guys can argue with me about that all day, man. Tell me I'm wrong. Tell me I'm wrong, man. And I see people out here struggling, 45, 50 years old, still don't have any idea what they're going to do in life. They're no closer to retirement, really, than they were the day they started working 15, 20 years ago. And so it's my hope that, you know, you guys take this information and think about it. And when they say it's not for everybody, I would tell you that it is for everybody, but a lot of you guys got to change your mind about how you look at money. Money is not a tool to go out and feel joyful about. It's a tool that we use to create peace in life. And if you're working to pay your bills, there's not a lot of peace in that. So the first thing that we got to do is we have to get whatever our monthly payments are, whatever our monthly bills are, we got to get you there. You need 70, 80,000 a year. That's the first goal. We got to get you there. Because see, then you can breathe. Like Jarius said, he took some time off. Like me, I was bankrupt 11 years ago. I learned the hard way. When I went from bankruptcy to retirement, I needed to breathe. I took 4 months off. I went to Florida. I had to think about my life. I had to think about what I really wanted to do. And I got a call. My wife wanted to come back to Cincinnati. I wanted to stay in Florida. I thought I'd just go deep sea fishing every day. And I thought life would be great. Retired, 40 years old. And, what I realized was that I thought I hated real estate because of the time that I had to put in. I mean, I worked 18, 20-hour days, man, I didn't look at, I didn't have expectations of what I was going to get. Like, if I put in so much effort, I'm going to get this. I just knew I wasn't going to stop until I had enough to retire. And I looked up and I had 35 grand a month in passive income in 30 months. I didn't even know it. I stopped and I was like, whoa, that was a hell of a run. But it wasn't those 30 months that created that. It was the 20 years of failing before that allowed me to have that knowledge. And so that's why I'm in here to share with you guys, man. If you got the knowledge, man, you got the network, you got, it's just now for me, like I was telling, I can't remember, I was telling somebody earlier. I think I was telling you guys, Val. In 2019, I got my biggest check to date. I got a check for like $5 million. And, I thought that, by that time I already had Lamborghinis and Bentleys and Ferraris and already was living in this house I'm in. And I thought, man, I would feel a certain type of way because I've reached this level that society said, and I didn't feel nothing. I didn't feel nothing. I would say it was just like ordering a Big Mac meal. There was no sense of anything. And I had to ask myself, what is the purpose of life really? What is it? And that's when, I ain't going to go there, but God was like, I want you to do social media and share your story. My father hung me over a cliff by a dam, which was like a cliff, When I was 4 years old, I thought he was going to kill me. So I had PTSD at a young age. And then I was just quiet. I was withdrawn. And then, I was peeing in the bed until I was 11, and they wondered why I was peeing in the bed. And after I stopped when I was a kid, well, I was traumatized. But I didn't know that because as a kid, how do you process that? And so, when I was 11, 12 years old, I started getting bad. And I got sent away to a children's home, at the age of 14 and met other criminal-minded people. And I got out when I was 15 and started selling crack. Came back to my neighborhood. It was infested with crack. This is the early 90s. And I used to rush cars on the block. Like that type of hustle, right? And so, by the time I was 18, I was on my way to prison. I got out. I was out 57 days, caught another case, went right back to prison. I had 4 felonies by the time I was 22. And I was very fortunate because my second time, I was facing 5 to 25 years. And I plea bargained for 2 years. And I went in front of the judge and I just asked him to have mercy on me. And he gave me a year. I didn't even know they could do that. And his name was Judge Fred Cardilano. And everybody told me, oh, man, he's going to stroke you. He's going to stroke you. But I feel like I've always had favor, but I've always looked at life in a positive way, too. And that second time I did in prison, I remember I was in solitary confinement. This was like December of 96. I got in a fight. And God came to me while I was in solitary confinement. And two things happened to me in there that changed my life. Number one, God came to me and he said, what if I told you you could be happy in here? And I kind of laughed at him. And I was like, what you gonna give me some women and for a red Ferrari and some alcohol? And he said, no, just make a decision to be happy. And then he left. And I was like, huh? And I just kept playing it over in my head. I was like, okay, just be happy. What's that mean? And then a couple days later, this correction officer, they come down there and you're in a hole and people banging on doors, screaming and yelling, just, it's going crazy. And this correctional officer, he said, and this guy's name is, you can look him up. He just got out. His name was Adam Avancini. Look him up, man. He just got out. Promise you, I was in prison with this guy. I never forgot it. He was 17. And this is in 96. And he said, Avancini, you want me to write you up? And he said, I don't give a F. I don't see the parole board until February 2nd of 2020. And I was like, whoa. I was like, I felt like I had a second chance on life. So I got out. I was 22 years old and I sold drugs. I didn't know what else to do. Nobody would give me a job, of course. And I ended up getting a plug and I was bringing in like 330 pounds of weed every week. And I was making like $242,000 a week in profit every time I made a trip. You couldn't tell profit. You couldn't tell me nothing. I thought money would always be easy like that. And again, I was 29 years old with millions of dollars, but I felt, I would say, suicidal. I was an alcoholic by that time. I was a womanizer. All I really wanted was a wife and kids, but how are you going to go out and have a wife and kids and you're a drug dealer? And so I cried out to God and he showed me real estate. And so maybe about, that was in 2004. And August 14th of 2004, I got my last pack back. And I was just like, man, I ain't touching that. I just knew, like, I was going to go to prison. I mean, the feds were on me. They was watching me. And I met my wife 19 years ago, almost to the day, on Labor Day. And, I had already stopped selling drugs, but I had just lost my best friend. He got in a shootout with the police. His name's Dennis McInage. You can look it up. He took somebody hostage. They killed him. And she had just lost her father. So we were both kind of in this place. And she just really supported me. And I told her, like I had already started doing real estate at that time. And so I had got up from about 2005 when I really started to 2010. I got up to about 250 units. And I was burned back then, but we were calling it cash out refis. And about 2008, I went and met with this guy at Fidelity. And he, I was showing him kind of what I was doing. He's like, well, if you're making this much money, you could retire. And I was like, probably. And he was like, you need to diversify. So me being poor, I'm listening to this white collar, college educated guy, and I'm thinking he's right. So I go out and buy a 56-acre junkyard. I go out and buy some commercial buildings and start a construction company. And a construction company vertical integration is cool. But I bought all this equipment. I was just, man, all over the place. No focus. And I went bankrupt and lost everything. Chapter 7. And that was hard because you look back and you say, man, I made all this money. And you just feel like a fool. Like you ain't got nothing left. What did you do with all your money? Well, what I didn't realize was a lot of it was I was trying to build businesses, but I didn't know how. So I would lose money. I would invest with people. The business would go bad. I mean, my budget was $57,000 a month, so I spent a lot of money too. I was reckless. But my wife stood by my side, and I told her one day, I was like, man, babe, I figured it out. I figured out what I was doing wrong in real estate. And she was like, "Oh, that's great, honey." But here I am bankrupt, right? And I'm telling her I figured it out. And probably about 20 something minutes later, the sheriff knocked at the door to hand me the paper that you got to sign for. So you got to come to court. You got a foreclosure. But my wife was like, "Honey, I'm going to go get my job back." And I knew how much she hated that job. She didn't want to work. She was like, "I don't want to work. If I'm going to raise a family, you want a wife? I cannot do corporate. I hate it." So when she said she was going to get her job back, man, I went outside and cried because I felt like I was letting her down. And I just remember at that moment, I was like, I'm going to do whatever it takes. And I just started calling and grinding in. I got a 97 unit. I didn't have the money for the deal, but I had got the deal under contract because I knew the realtor. And I was like, man, I got some guys that are going to back me. And it was a 97 unit. I bought it for $1 million. We couldn't finance it at the time. It was 56 units on the fuel. It was 17 units on Brackenwoods and 24 units on McHenry. That's all the hood. That's all the hood, right? You guys know Cincinnati. And so we ended up getting the owner to finance $850,000 of it because we went to the bank, and of course we got rejected because his rents were like $365 for one bedrooms and $465 for twos. And we ended up getting the value up within 18 months to like $2.4 million, doing a refinance out, taking the owner out. The owner, whose son, he was like 82, his son got all the money back. He was like, man, I really was enjoying the 5% you guys were giving us on the money. He gave us the $850,000 back to invest and buy more property. And so, we flipped him into an investor. And that very first year after I came out of bankruptcy, not the first year, 2013, but 2014, I bought 28% of all the multifamily that traded in Cincinnati with a 400 something credit score, with no taxes. And so I ask you guys now, like, what's holding you back? It's really just knowledge. It's not money. It's not credit. It's knowledge. Because you can take knowledge and you can add value to people's life if you got enough knowledge. So that's why I'm here to add to your guys' life is knowledge, man. And just give you my perspective. And I'm not going to tell you what I'm telling all you guys is right. I may be the wrong solution to things that I got. I'm just telling you from my perspective. And so, man, I appreciate you guys jumping on and, listening to my son. And he's going to go through some failures. He will. And that's good. I look at that as a good thing. I don't look at that as a bad thing because you got to build some skin. You got to build some tough skin. And so, next week, man, he'll be coming on here again. I'm just going to have him share. If you guys got kids, man, bring your kids in. They ain't got to work 40 years, man. They ain't got to do that. By the time his peers get out of college, he'll be retired. Think about it. I told him, I said, Caden, go become a millionaire. Then you can go to college if you want. But don't go and get that degree and then you're dependent on the only thing is what this degree gave you. Because I see so many people, 40s, 50s, miserable, 100% miserable with their job. Their boss doesn't listen to them. They don't feel valued. And we repeat that cycle. Then we send our kids to college to do the same thing because it's all we know. And I'm just here to tell y'all, man, it's a whole nother world out here with massive wealth. And somebody asked earlier, aren't you afraid to get all that debt? No, because I know what I'm doing. I know what I'm doing. And the way that we position it, when we get done, the bank is the only one holding the bag. Think about it. The bank's the only one with any money in the deal. So I took my money away where it's creditor protected. So if something goes down, I can come back and buy that mortgage note for 50 cents on a dollar. What are you afraid of? Come up with a solution for every problem out there. And I'm not telling you that I would ever want to do that. But I'm just telling you, if that's my worst case, I'm okay. I can live with that. Right? Learn how to buy right. Learn how to buy in the right areas. I love you guys, man. Thank you guys for tuning in. We'll see you guys Thursday at 12 o'clock p.m. Eastern time. and we'll see you guys next week, 7:30. Use the same Zoom link, man. Bring your kids, man. If you bring your kids, man. Teach them this stuff because that's the more powerful stuff. That's what I'm after, the young kids. I want to help them change their mind about life and just show them the different options. I don't want to dictate to them what they're going to do. I just want to show them different options and let them know there is another way out here. Thank you, Val, for hosting. Appreciate you guys, man. Y'all have an amazing day. And hey, one more time, if you guys need some free training, just drop below. Let us know what you need a training on. I've created a lot of different trainings out here that we send out to you guys. And if you guys want to hear more about our mentorship, a comment mentor too, at least get on a call and see, at least talk to somebody and see if what you're going through, if that's something they can help you guys with. All right. All right, y'all. I'll see you guys later, man. Y'all have an amazing night. See you next week. Later.